Good morning, everybody. I'm a few minutes early, so I'm not going to start class just yet. Just wanted to say good morning instead of typing. Sure hope everyone's doing well. Ed, good to see you. Bobby T. Always. Gary, go get those lungs checked out. Hey, good morning, Rain. Nice to see you. Guys, how's everyone doing today? Let's keep our fingers crossed. Do the good movement dance for the markets today. It has been an amazing week or two for study, hasn't it? Great opportunities to go through. We're going to talk about how to study today a lot because sometimes when the market's not doing, when it's not giving advantages, sometimes it's better just to go back and review, right? If you can get some consistency on, Gary, if you get some consistency on any market, you can make some money, right? What do you guys suppose is the biggest challenge for new users? It's not the market, right? And I firmly believe this. It's doing nothing when there is nothing to do. Guys, that's what separates successful traders from traders that are on their path to being successful, right? That's what separates consistent traders from inconsistent traders. Trying to make something happen instead of allowing something to happen. And it's funny because the more time that you spend with the software, guys, the more you realize this. Whoops. I'm going to show you a picture that was sent to me earlier today. And all it said was everything agrees. So let that soak in for a second, guys. Everything agrees. Every chart is going the same direction. The momentum is pointed the same directions. The areas line up. Everything agrees. Why is it so hard to wait for that? We know that's the recipe for success. Conrad learning how to lose correctly. I like that. I like it a lot. Guys, there are advantages in the market. There's advantages of momentum. We talk about this every day. There's advantages of a clear path. There's advantage of taking that entry that gives you the highest chance of success. They're easy. They really are. They're easy to recognize. They are so difficult to wait for. So we're going to talk about it, and I think that it all stems from, let's see if we can find a clinical definition of trust. What is it? A firm belief in the reliability, the truth, the ability, or the strength of someone or something. Guys, this classroom is designed to help you build trust. This classroom is designed to get you to where you believe in the reliability of the high probability trend trade, to where you believe in the truth that the methodology wins more than it loses, to believe in the ability of this highest probability trend trade to provide you with a solid foundation capable of winning while you learn the software, while you go and search for other trades. And you're building trust really in the strength, but the belief in the strength of this software, the strength of this methodology, guys. And it takes a while to develop trust, doesn't it? It does. When you met your wife, you didn't trust her right off. You didn't throw her the keys to your car, right? You were dating. She was pretty. It was neat. She smelled nice. But you knew that there was something there, and eventually you build that trust and you build that relationship. Guys, we're doing the exact same thing with the software. But before we do that, whoops, I just pasted. Before we do that, guys, let's go to forexfactory.com. Each and every morning we're looking for news, right? We're not worried about what it says. We're just worried about the impact that it may have on the market. Today is Wednesday, May 24th, guys, and at 10:05 a.m., Treasury Secretary Yellen is going to be yelling, and it's a medium impact news. It may move the market. He may say something that upsets somebody. He may say something that excites somebody. And that market may move quickly. It may become a little unpredictable. It may bounce. So knowing when the news is at 10:05, guys, put a note on a piece of paper. Ask Siri to remind you. Is it she? Did I say he? Sorry. I've never met Secretary Yellen. And it felt a little sexist to assume she based on secretary, right? Come on, Conrad, get out of the dark ages. Just kidding. Sorry, guys, that was my ignorance. At 10:30 a.m., crude oil inventories. If you are a crude oil trader, even though this one says low impact, it's going to have an impact, right? At 10:30, you probably don't want to be in front of that freight train of emotion that could happen. Janet Yellen, see? Guys, I don't know if you're looking at the same screen as me, and I think it's wonderful that everybody's concerned about pronouns, but it doesn't give me a picture or a first name. So that was my fault for assuming, and I own it 100%. But guys, let's recognize news at 2 o'clock, FOMC meeting minutes. Guys, high impact. High impact. This may make things crazy. And guys, sometimes the market wavers. Sometimes it sits still. Sometimes it does nothing, bounces between areas before a big meeting minutes like this. High impact at 2 o'clock. So be prepared to be bored some days when this happens, guys. But that's really what I do every morning. I set up my computer. I drink a little coffee. I go to forexfactory.com. And then I get to the day, guys. I load all my charts and I come to the Nexgen education page. And guys, this is where everything happens. This is where the magic is. This is where anything that you need to be successful, true story, anything that you need to be successful can be found on this page, guys. And there's a two-step path. And I was talking with someone this morning about the path. Good morning, Ziva. Guys, you have to make this yours, right? You have to make what you do with these indicators yours. You have to make it personal. It has to be your trade. Good morning, Marshall. Guys, your job in the beginning is just to learn, right? And there's two ways that get you to where you need to be the fastest. The first one is posting your trades in class. I can't stress this enough, guys. If you're not posting in class, you are absolutely wasting the most important resource in this educational process. 15 hours every week, Monday through Friday, 9 a.m. to noon Eastern, guys. My sole purpose in this world is to look at what you're doing and to talk to you about how you can do it better, to encourage you by letting you know what you did well, to praise you when you make great decisions and help you recognize decisions that maybe weren't great. The whole idea, guys, is you have a coach, you have a mentor, 15 hours every week to give you feedback. I would encourage you to take advantage of that. If you're a wallflower, if you don't like to speak out in public, guys, this isn't public. Change your name. Don't let it be your first name. Change your name to Bubba Joe Jackson or something like that. And post. If you are a woman, post as a man. They'll never know it's you in the grocery store posting these trades. If you're a man, post as a woman. I don't care. Make up a name. It doesn't matter. But the reality is the more you post, the more questions you ask, the more charts you share, guys, the quicker you're going to get to where you want to be. And if you are the type of person that gets nervous for that kind of outward expression, start doing it on day one, guys. Start posting those charts so that it becomes natural. I'm pretty warm and fuzzy when it comes to reviews. It's rare that I make people cry, but I'm willing if that's what you need. Guys, the second half is use your spreadsheet. Nexgen provided you a spreadsheet, and let me show you this straight from the education page, from the tutorial page. You can be a snake, Ron, but you have to do it quietly. Don't hurt feelings. We've already had the Janet Yellen talk. Guys, there's a trade tracking sheet. Gosh, I love what John Novak did to this website. If you click the link, it's going to give you a zip file. That zip file is going to have a spreadsheet in it, guys. This spreadsheet is your path to success. There's 2 pages on it. That's it. There's a copy of your trade tracking. Oh my gosh, my OCD is off the chart with this one. God, your trade tracking it's just your trade journal. Every time you take a trade, what is today, the 24th? I put today's date. I talk about what sort of trade. Hey, good morning, Safia. It was a trend trade, right? There's my link to it. How did I feel? I felt relaxed because I'm following rules on that trend trade. My trigger lines were their strongest, right? All of these drop downs had odds favorable momentum, the stuff that we talk about every day. My 5-1 chart supported it 100%. And guys, I won this trade, right? Or maybe I lost this trade. It's okay either way. All we're doing is we're working on entries. And then over here in notes, if you broke a rule, say that you broke a rule. If you followed all your rules, say that you followed all your rules. But what happens is if you do this every day, and hopefully I left that picture up. I think that I did. Where's my library? Where's my editor? I'm getting there. It's still early, right? Guys, if you take the time to fill up that spreadsheet, this is what we're doing with it. Every morning, you're going to study the previous day's trade. Guys, show of hands, who did that? Who looked at what they did yesterday and said, I'm going to do it better today? Who looked at that gap theory that they fought? Who looked at that entry from nowhere, right? Who did that this morning? I did. I looked at yesterday's trades. You've got to, guys. You've got to study them, right? If you don't study history, it's doomed to repeat itself. And you did replay data. Perfect, Conrad. Guys, what worked for you? What didn't? Edwin, if you don't document, it does count. You're doing something, but you're doing half of it, right? You're at the drag races with 83 horsepower instead of full throttle boogie, right? Ed, why wouldn't you annotate? Document, right? What did I see? What did I do? What rule did I break? What rule did I follow? What was easy? What felt forced? What made you nervous? Guys, I'm telling you, if you do this every morning, your day is a better day. Your day is a more clear day. Man, D, I do too. Because how many times are you going to break a rule before you stop breaking that rule, right? Eventually, you're just like, all right, I'm going to stop. This takes my money every time, right? It feels forced. It made me nervous. And eventually you stop doing it. Guys, mine was termination conditions. I traded into termination conditions like there was a guy with a sack of money handing me $20 bills every time I traded into a termination condition. So I had to go back and I had to study, right? I had to get that feedback in class saying, hey, Mark, dude, seriously, stop. You're making everybody nervous with your termination condition trading. And it made me better. It really did. And guys, then the second thing that you have to do is you've got to take those pictures when it's easy, when it's effortless, when the rules are met, when it suits your needs, right? When it makes you feel good about the trade, that's your trade. Take pictures of it. Take pictures of that perfect entry. Take pictures and start working on your management. When you begin to recognize patterns as you learn to read your software, put it in chart reading things. And if you're like me and you love to trade into termination conditions, man, start taking pictures of termination conditions so you don't have to think twice to recognize them. And guys, this is your path. This is the proven path. This is the path that, I kid you not, gets everybody where they want to be. And you either embrace it or you don't, right? I'm encouraging you to embrace it. It's been proven for decades. This is how you get to where you want to be. In our classroom, and notice that I say our classroom, not my classroom. This is not a lecture, guys. This is a conversation. I rely on you. We're going to learn the trigger lines and the rules for when it's okay to trade, guys. We're going to talk about 3 little rules, and they're only going to be on 2 charts, and they're going to provide 3 very, very clear advantages to get you into a trade. Your job is to simulate your trades daily, guys, to get on that sim and to practice following rules. Don't trade the wrong rules, because when you do, what you find is that you're really kind of creating this long-term failure. You're teaching yourself to break your rules. Simplify, simplify, simplify. My next tattoo is going to be the word simplify, I think. What look are you going to commit to? Study them so they become easy, guys. That's where your spreadsheet comes in. I have over 200 pictures of a rules-based entry here. 200 pictures of what it should look like when I get into the market. I'm going to share it with you. Steal it. Click on these. Guys, the looks are easy for me. My goal is to make them easy for you. After class the next day, just like you guys said you did, download that replay data, replay the day, fix your mistakes. Take the trades that you skip the trades that you shouldn't have taken, and then keep taking pictures, guys. The more pictures you take, the quicker you get to where you want to be. I try to take at least 15 pictures a day. The reality is I probably take about 40. But 15 is my minimum, because after 90 days of study, guys, 3 months of your life, you're going to be doing this for the rest of your life, you have almost 1,000 pictures annotated, telling you what you did, what you saw, what you felt. And repeat this process every day until you're always taking the correct trades, right? Until you're always following rules. Because if you're always following rules, your trades always look the same. And if your trades always look the same, and they've been proven to win more than they lose, guys, you are on that path to guaranteeing yourself that you can win. And guys, Gary, I'm not being oppositional. Guys, don't look at NASDAQ. If you're brand new, stay the hell off of NASDAQ. NASDAQ is difficult to trade. It requires a completely different setup. The patterns are there, but NASDAQ is like a hopped up weasel on meth. There's no reason, guys. You can go to NASDAQ later when you get comfortable, when you're making money consistently. But let me say something right now, and I want you guys to put your listening ears on. If you're chasing more trades because you can't be consistent with one trade, if you're chasing more trades because you can't take a high probability trend trade, you can't convince yourself that 3 advantages on 2 charts is your best bet for success. If you're chasing more trades, guys, that's not the answer. The answer is to chase better trades. The answer is to put yourself in a position to win. If you won't do the study to become proficient on one market, one trade, how are you going to become proficient on 8 markets and 10 charts and crazy things going on? Just something to think about. Guys, we're going to talk about a high probability trend trade. High probability trend trade. We're going to talk about a trade where every indicator on every chart agrees for the trade, guys. You are going to have 3 rules, and 3 rules provide 3 advantages, and 3 advantages are the recipe for a trade. You're going to have strong triggers. You're going to have nothing in your way, and you're going to use an entry formula that gets you in at the place where the market is likely to continue. Guys, these 3 rules happen on 2 charts. That's it. 2 charts. There's no range charts. There's no 21-3 charts. There's no 13 range charts. There's no minute charts. Guys, it is a 13-2 and a 5-1, and they use the Nexgen dynamic Renko bars. That's it. This is all you need to be successful, to build a platform capable of winning before you start chasing other stuff. I'm feeling passionate today, guys. I hope it doesn't come off as preachy. Your 13-2 chart is going to provide your first 2 advantages, guys. Really, your first 3. The trend of the market. Man, if your 13-2 is green, you're in an uptrend. And if you're in an uptrend, you're only looking for high probability trend trades long. If your 13-2 is red, You're in a downtrend. You're only looking for rules to be met for high probability trend trade short. Guys, it's pretty simple. Let me show you just how simple it is. You ready? Conrad. How easy is this? If the market is going up, look for rules to be met for long trades, guys. If the market is going down, look for rules to be met for short trades. If everything says up and you try to go down, the odds are favorable, you're going to be separated from your money. If everything is going down and you're trying to go up, the odds are favorable, you're going to be separated from your money. Guys, don't fight the trend. The trend is your friend and every other cliche that you can think of. You're going to recognize that trend in a fraction of a second on your 13-2. Which direction should I be trading? Next, rule number 1 is going to be met on the 13-2. This bigger, slower chart. It's a broad stroke of a brush. Guys, rule number 1 is strong trigger lines. Strong trigger lines provide you the advantage of momentum, guys. Every trade that I take has momentum. You're going to have to do the work and determine if that's right for you. But I can tell you that when a market is screaming in the direction of the trend, it's hard to slow it down. You're also going to make sure that there's nothing in your way on the 13-2. This is rule number 2, guys. And when there's nothing in the way on the 13-2, you have the advantage of a clear path. Absolutely nothing to slow down that market that has all that momentum. Doesn't that sound amazing? If you could look at your charts and in just a second or two, understand that you have advantage of momentum and a clear path on your side, guys, what a great way to take a trade. This broad stroke of a brush reflects the overall temperature of the market, guys. It lets you know what the people in charge are thinking. It lets you know what the deep pockets people are thinking. It lets you know direction. It lets you know momentum. It lets you know areas. When you have those two advantages, guys, we're going to whittle it down on a 5-1. We're going to take a smaller, faster chart. What happens in one bar on the 13-2, guys, comes about on maybe 15 to 30 bars on the 5-1. And we're going to use a limit order. And a limit order means that you're actually going to wait for the market to come to you. You're going to be able to pinpoint so accurately where the market's likely to continue. You're going to wait for it to come to you. And you're going to do it at a line, guys. We trade from lines. We're going to use a limit order to buy or sell a pullback in an area inside of some favorable large triggers, guys. It's going to allow you to reduce your risk and maximize your profit potential. Guys, this is your plan. I encourage people every day, master this before you start chasing other things, right? Give yourself 3 advantages going into every trade before you try to chase other trades, guys, because this is a plan that has been proven to win. And this is a trade, a high probability trend trade, has been proven by you guys doing the research to typically win 70 to 80% of the time. Let that sink in, guys. If your win percentage is 30%, if it's 40%, even if it's 50%, you're doing yourself a disservice. Think about that. Guys, the goal for trading is to win, right? The goal is to make money. You're gonna lose. Everybody loses. Anything that wins 70% of the time loses 30% of the time. But if you're giving yourself these 3 advantages every time, you're stacking the deck in your favor. And that's what we're trying to do in this classroom, is to build that trust in a methodology that has been proven to win more than it loses. And the cool thing is, guys, is this high probability trend trade is designed to teach you to read your charts. Once you can read your charts, the world is your oyster. Guys, chart reading incorporates 3 things for mastery. It incorporates understanding where the market is likely to continue, and then you using that continuation point for an entry to give you the highest probability of success. It's going to help you understand where the market is likely to go. And when you know where the market is likely to go, or you know where it has the potential to go, using Fibonacci, using these terms, using momentum, you can begin to create targets that make sense. And then understanding where the market is likely to stop. Understanding when there's a spot on the chart that takes away your clear path, guys, This one keeps the powder dry. This is the one that keeps you from trading into areas that may reverse the market. Guys, these Fibonacci areas are unfreaking believable. If you've just scrolled back and watched how many times the market turns at Fibonacci, you understand that these areas aren't just our areas, the Nexgen users. These are the areas that deep pocket investors, these are the guys that move the market, recognize as well. And they're reacting to them. More often than not, they're reacting to them. So you're going to understand where the market is likely to go. That's going to be targets. Where the market is likely to continue, that's your entry area. Where the market is likely to stop, that's going to be defining your clear path. We're going to do it on 2 charts. We're going to use 3 rules, and we're going to break down these advantages right now. If you have a question during class, guys, I want you to raise your hand. I want you to say, hey, Mark, that made 0 sense. Do me a favor, back up. Let's talk about it again. If you do that, I will stop what I'm doing. I'll back up. We'll talk about it again. That's my promise to you. Nobody left behind in my classroom. Guys, when the market is in an uptrend, when the background is green on your 13-2, rule number 1 says that we must have strong triggers. Strong triggers provide the advantage of momentum, and they look exactly like this, guys. Small triggers, the solid lines, are crossed up and above the large triggers that are also crossed up. Guys, it's the space that's created between the 2 trigger lines that let me know that the odds are favorable for the market to continue in the direction of the trend. When it's a downtrend, small trigger lines are below the large trigger lines. Large trigger lines are wide. They're angled in the direction of the trend. Guys, this is your momentum look. The odds are favorable for the market to continue in the direction of the trend, and you're going to hear over and over in this classroom, odds favorable momentum, odds favorable momentum. You're going to see it labeled as OFM. And if you open up a 13-2 and just take that big broad look at it, no indicators on it, you're going to recognize odds favorable momentum in an uptrend. You're going to see it in a downtrend. You're going to recognize that it's not always present, which means that you have to be a little bit patient. You have to wait for that advantage of momentum. Because when the small triggers work inside of the large triggers, guys, we call this a weakening of the large triggers, anything can happen up or down. One is the advantage of momentum, one is a coin toss, right? Anything can happen. Notice how the market slows down, heads the other direction. Anything can happen. The market slows down, heads the other direction. Odds favorable momentum, almost every time that market gives you an opportunity, continues in the direction. Guys, these tails right here, these are potential pullbacks on that smaller, faster chart. On the 13-2, they just look like a black line. On the 5-1, it's 15 to 30 bars, taking you back to your best entry. When the market is in that momentum state, when you have that strongest look, guys, that's when the advantage is present. That's when the market is most likely to be successful as it pulls back to Fibonacci on a smaller, faster chart. Is everybody comfortable with odds favorable momentum? Guys, it literally takes you about 30 seconds to recognize. I've got a lot of stuff up here. Holy smokes. Watch this. Guys, here's a 13-2. I'm going to get rid of everything but trigger lines. Odds favorable momentum, the market continues up. Anything can happen. Look how the market reverses. Odds favorable momentum, the market continues down. The trigger lines return to the large. It gives a little pushback from the loss of momentum, ultimately starts in the same direction. But guys, look at these tails when momentum is its strongest. This is your money. This is where you have the best. And look at this. When the market goes sideways and wonky, your trigger lines don't match up. Anything can happen, leads to the reversal. Odds favorable, the market continues down. Is everybody good with this look? If you don't commit to any other look, any other advantage, if you're like, you know what, to heck with Mark, I don't need his silly advantages, committing to momentum is going to be the most advantageous for you. That's the one that's going to put you in the catbird seat. Once you have momentum, we're going to stay on the 13-2 chart, and we're going to talk about termination conditions false, making sure that there's a clear path. And once again, I'm going to come straight to the education material, guys, straight out of the website. Anything and everything that you need is right here. Termination conditions are areas that may reverse the market, guys. Let me open this up. Termination conditions can create a bounce that's really untradeable. It may create a full reversal, but what it does is a termination condition takes away your clear path. The areas that may alleviate you of a clear path are blue Fibonacci support, red Fibonacci resistance, yellow 1-to-1s. Guys, those cyan divergence low lines, magenta divergence high lines. On a smaller, faster chart, the only termination condition that I look for on a smaller, faster chart is 3 divergences in the same area. We'll talk about how to use that not only to recognize when a market may be ending, but it's also going to be very valuable for managing their trades. And sometimes there's a large chart mid-band if the large triggers remain a full bar away. And guys, here's a picture. If you're brand new, here's your key. This is your roadmap to what you're looking at on your charts, right? The areas that may reverse the market. And guys, I want to let you know about divergence highs, divergence lows. This is not a termination condition. For those of you that get confused with this one, and a lot of us did, I did, so much so that I had to go through and do a lot of study on it just to get it out of my head. This pivot where divergence prints, where that negative number prints, where that cyan line runs, guys, this means that there was a loss of momentum. That's all it is. Divergence equals a loss of momentum. This on its own is not a termination condition. In order for something to be a termination condition, you have to do two things. Well, the market has to do one thing, and you have to do the other. The first thing is price reaches an area, guys. Good morning, Debbie. And for those of you that are new, you see a lot of people posting pictures in the room, and you're probably thinking to yourself, why doesn't Mark look at their pictures? Why doesn't Mark give them feedback? Well, I'm going to talk about rules first, guys. We're going to talk about the advantages, the rules, what you're looking for. Your job is every time that you post a chart, you're going to write the rules that got you in. So hopefully each and every one of those posts that you guys are putting in here lets me know why you did what you did. And then we're going to go into that accountability phase, right? I'm going to hold you accountable to the rules that you put on your chart, and we're going to make sure that you're being consistent, right? That you're not lying to yourself, saying that you had something that you didn't. Guys, termination conditions. Rule number 2, 13-2 chart. Providing you the advantage of a clear path. It's a two-part process. The first thing that has to happen, price reaches an area. Write it down on a piece of paper. If you're the kind of person that learns from writing, write that down on a piece of paper. Price reaches the area. These Nexgen dynamic Renko bars come down to blue Fibonacci support. When price reaches an area, all you have to do, so easy, is ask yourself, where are the trigger lines? Guys, if your trigger lines remain above support, don't go short into support. Support has the potential to reverse the market. It has the potential to create a bounce that'll take you out of a position. Two-part process. Price reaches the area. If none of the trigger lines break through the area, you do not have a clear path. Rule number 2 is not met. Not looking for trend trade short into the area. Price reaches resistance. Absolutely no trigger lines break through the area. No longer looking for long trades, not trading in the direction of the trend, not hoping that it breaks, just simply sitting on your hands and saying, I don't have the advantage of a clear path. And look at this. We go from resistance to support to resistance. Guys, there is no clear path. 90% of what you do during the day, and guys, it's probably more like 95, is simply waiting for those advantages to be present. It's sitting on your hands, waiting for the advantages so that you can get in and give yourself the best chance of a victory. No longs, no shorts, no longs, right? Price reaches resistance. It reaches one of those divergence highs. That's what creates a pivot stop out. When a divergence high gets exceeded and then traded below, the triggers don't follow. Pivot stop outs, very powerful termination condition. Becomes even more powerful when it lines up with Fibonacci, guys, and this termination condition gives you a full reversal of the market. Look at that. Smalls below the large, odds favorable momentum, everything says down. This is what we call a strong top. A termination condition that creates a full reversal is a strong top. Go in the other direction. Price pulls down, triggers start to break through areas, guys, and we get one of those divergence lows. This is not a termination condition. This line is not a termination condition because this line doesn't print until your second or third bar. When price comes back to that divergence low, price reaches the area, right? The first part of the equation, trigger lines remain above. Now I have a termination condition. Now I have one of those pivot stop outs. The pivot stop out creates a full reversal. The full reversal gives me odds favorable momentum. Guys, this is what we call a strong bottom. Strong bottom is a termination from a low that creates a full reversal. Strong top is a termination from a high that creates a full reversal. And guys, no matter what the momentum is on your 13-2, even with odds favorable, when price reaches an area and none of the trigger lines break through, no more short trades, guys. This termination condition, look at the bounce it creates, right? Takes away the advantage of a clear path. This termination condition ultimately gives you a full reversal. It gives you small triggers outside of the large triggers and a clear path. And guys, there's another one of those tails. That's your best of the best. That highest probability trend trade that happens after a termination condition on the 13-2. These are the ones with the best chance of success. Is everybody cool on the recipe for termination conditions? Price reaches an area. If none of the trigger lines break, guys, sit on your hands. You don't have to be first. You don't have to hope. Here's terminations from a high. For those of you that love to trade into them, I'm going to give it to you in the class. Maybe we can rectify that problem. Guys, here's that pivot that creates divergence, not a termination condition. When price reaches that divergence high, the trigger lines remain below. Now it's a termination condition. Termination condition creates a full reversal, guys. We have a strong top in place. Price reaches Fibonacci resistance. Notice how it's one tick off. Guys, these are areas. One tick off is close enough. None of the triggers break through, ultimately creates a full reversal. Once again, we have a strong top in place. Price reaches one-to-ones and resistance. Absolutely none of the trigger lines break through. We have a termination condition. Notice that your large triggers remain green. They remain up. Guys, this is not a full reversal. Therefore, it's not a strong top. It's just a termination condition. And then we'll see the exact same thing from lows, guys. Price reaches one-to-ones. None of the trigger lines break through. Therefore, it is a termination condition. Rule number 2 isn't met. It ultimately creates a full reversal. Look at those tails, guys. There's your best of the best. Termination, full reversal. There's the tail. Termination, full reversal. Probably a tail somewhere off in the distance. Guys, this is it. One of the biggest challenges I see with new users is trading into areas that they hope breaks. It typically happens at the end of a move when they missed the move previously. And if you keep it black and white initially, don't deviate, right? Don't create exceptions to rules as you learn the software. If no triggers are through the area is not broken, there is no clear path, period. Super simple. If both the small and the large break through the area, both the small and the large get above resistance, resistance begins to act as support. Support, you have a clear path. There's one of those tails. Guys, this is your clear path. It either is or it is not, right? So there's one look that we're going to talk about because this is one that's probably going to be your first trade outside of that high probability trade. And this puts you in the realm of medium probability trades. And I want to define it real quick before we talk about what it is. A medium probability trade, it means that most of your indicators line up for a trade. Man, there must be something going on in the market. Look at all you posting. Can't wait to see these. A medium probability trade is defined when most of your indicators line up for a trade. However, a small issue exists, guys. Your first medium probability trade is typically going to be what we call a 50-50 trade. And a 50-50 trade means that you do not have a clear path. This gets to be your small issue. 50-50 trade means that price has reached the area and then the small triggers have broken through. 50% of your trigger lines have exceeded the area. 50% of your trigger lines have not. It has nothing to do with your chances of winning. It has everything to do with visually. The smalls have broken, the large have not. And the key to a 50-50 trade, guys, and say this with me at the loudest voice you're allowed to have in your house, odds favorable momentum is imperative. Strong triggers break things, guys. If you're trying to justify an area that hasn't broken with weak triggers, you're probably not going to do very well. Odds favorable momentum, the smalls are through, the large are not. 6980 is now an area with the potential to break. That's your issue. If this is your small issue, guys, don't let any other issues exist on your chart. Don't let there be losses of momentum. Don't let there be weak triggers, right? Don't let there be anything other than perfection on this 50-50 look. Because look down here, smalls broke through and large didn't. The market ultimately goes up, doesn't it? The area never breaks. It has the potential, but it is not a clear path. So guys, I'm going to give you this picture as well. I would encourage you, I can't make you, but I would encourage you to focus on either broken or not broken in the beginning, right? Either broken or not broken. It's going to take a lot of stress off of you. It's going to allow you to learn to read your charts, and it's going to keep you in that realm of a trade that's been proven to win more than it loses. Guys, those are your 13-2 termination conditions. Remember I said there's one more that you're going to see. And it's going to happen on the 5-1 because sometimes we clear areas, all the trigger lines are through, and the market seems to turn from nowhere. Or even with odds favorable momentum in this uptrend, everything says up and the market appears to just change direction. This third termination condition is true on any chart, guys. 3 divergence in the same price range may terminate the trend. You're going to see it first on a 5-1, that smaller, faster chart, that refinement chart. What is 3 divergences? 3 divergences means that you've lost momentum 3 times, guys. On this push down, 3 times, momentum couldn't follow price. It may terminate the trend. It becomes even more powerful when your small trigger lines work their way inside of the large trigger lines, guys. You get those anything can happen triggers, which is a visual representation of loss of momentum. You've coupled it with 3 divergences, which is once again a visual representation of loss of momentum. We're reading our indicators, and it becomes even more powerful still when that third pivot loses momentum and it's higher than the previous from a low. It's a head and shoulders pattern, guys. It means not only could price not get down there, but now momentum's waning too. You'll see the same thing from up top. That lower divergence is going to make a difference. Guys, you're going to see this look when things like this are happening on the 5-1. You're going to see those multiple divergences. You're going to see them and say to yourself, you know what? Even with odds favorable momentum, I'm not going to look for that long trade anymore because my smaller, faster chart has told me that things are changing. You will identify change faster. Is everybody comfortable with that? Guys, 3 divergences. You're going to see it on the 5-1 first to recognize change. If it happens on a bigger chart, it typically creates a move the other direction. This is not guaranteed, right? We saw it yesterday on the S&P. We had 3 divergences from a low and it pushed up, but the sellers decided to push down anyway. Guys, we don't control the market, nor do we predict what the market's going to do. All we do is wait for the advantages. And so far, we've talked about the advantage of momentum, right? Given to us through momentum indicators, those trigger lines, strong triggers. We now have the advantage of a clear path. There's absolutely nothing in the way. All we need to do now is recognize where the market is likely to continue and give ourselves the advantage of an entry area. Once again, coming straight to the rules right out of the tutorial section. When your rules are met on the 13-2, this is the look on your 5-1. We're in an uptrend on the 13-2. We have odds favorable momentum on the 13-2. We have a clear path on the 13-2. And on the 5-1, everything is screaming up. And you're going to get this feeling like, oh man, the market's going without me. Woe is me, whatever shall I do? Guys, this is where you've made the decision that it's time to take a trade, and you're going to focus your attention on these 5-1 large triggers. And when I say large triggers, I mean large and synthetic. Your smooth trigger lines are just the 5-1 large triggers. These ones that are stepped, look like stairs, guys, those are the large triggers from your 13-2 chart. And when they work together, they give us what we call favorable large triggers. And favorable large triggers mean that they're strong, they're wide, they're in the direction of the trend. They should be overlapping. They should be one on top of the other, because when you have that, it's going to provide your absolutely smallest window of opportunity, the smallest area where the market is likely to continue. It's going to allow you to reduce risk. It's going to allow you to maximize profit potential. And it's only going to exacerbate those advantages that are coming from this entry, from this rule number 3. That rule number 3 that says you're going to use limit orders at areas inside of favorable large triggers. So guys, all you're doing now is you're identifying the triggers and you're looking at the areas that are lining up with them. Trend trades, high probability trend trades can come from 3 areas: fibs, mid bands, or yellow 1-to-1s. These areas may be stacked one on top of the other. They may be spread apart, but this is where trades come from. Our rules say that we're going to use a limit order to buy or sell a pullback. And a pullback is nothing more than a small retracement in price counter to the underlying trend, guys. When the large chart says up, when the large chart says clear path, we're going to rely on a small handful of traders that want to fight that trend, that want to fight the momentum. And that pullback starts with a reversal bar. And at the time of the reversal bar, you're going to create a window of opportunity. And for a long trade, your window of opportunity goes from the highest point of support inside of favorable large triggers to the lowest point of support inside favorable large triggers. Guys, such a key phrase there. Areas inside of favorable large triggers. Your job is to use a limit order and to put it right at the top of that window for a long trade. Because if the market is moving with momentum on the 13-2, if the market has nothing in the way on the 13-2, I'm not expecting these guys fighting everything to push too terribly far. So my limit order goes at the top of the window of opportunity. And if the market, if that push comes back to the highest point of support inside of favorable large triggers, I'm now in a long position. 79.21, guys. I have all the advantages in place, right? I have the advantage of momentum because of strong triggers. I have the advantage of a clear path because there were no termination conditions. And now I have the advantage of an entry area, that point where the market is likely to continue, because I used a limit order at an area inside of favorable large triggers. We've created the window from high to low. And we've created that window from high to low. Even though we're getting at the high, guys, our protective stop goes below the low, outside of the window, where the market shouldn't go. And that's why we're identifying top to bottom. From mid-band to 1-to-1s is where the market is likely to continue. So below those trigger lines, below those 1-to-1s, it's where the market isn't doing what it is anticipated to do. That's where your protective stop goes. That's where you exit the trade and you say, well, this must be one of my 20 or 30%. That's okay. The advantages were in place. I'll wait for the next trade. But I take this trade every time it sets up, guys. I don't hesitate. I don't have fear. Because this is the trade, high probability trend trade, happening after a termination condition on the 13-2. Guys, this is the one that typically does this 70 to 80% of the time. Profit target reached. And let's talk about the window. Let's talk about stops, right? I'm going to take a picture of the picture here. When this reversal bar prints, the easiest way to form that window, guys, is grab a drawing tool. Go from your highest point of triggers to your lowest point of triggers and just put a box on it. It's pretty easy. And then if you're on NinjaTrader doing this, squeeze the top of that box to the highest point of support. Squeeze the bottom of that box to the lowest point of support. Guys, this is where the market is likely to continue. This is where rule number 3 is in effect. And your initial stop is going below that window, right? If the market pushes beyond, we don't want to be a part of it. Don't get caught up on ticks because the 5-1 is a smaller, faster chart. There may be fluctuations, guys. There's nothing worse than jumping in at the top of a bar because you were afraid it was going without you, only to watch it come right back to that area inside of favorable large triggers. But once it begins to move in the direction of your trade, you can take that risk and reduce it below the reversal bar because you waited for the pullback. That risk is minimal because you waited for the pullback. That profit potential grows exponentially, guys. This is your highest probability trend trade. This is a trade that you're probably going to recognize, oh, I don't know, within the first week, right? It's going to take a couple days to recognize the pattern, guys. It's your job to study, to build that trust. And the easiest way to build trust is to study, guys. And that study is effortless. You're going to go back on your 13.2. And you're going to find the rules met on the 13.2. You're going to find odds favorable momentum. You're going to find no termination conditions. And if you see a tail, circle the tail. If the tail lines up with areas of support or resistance inside of favorable large triggers, guys, this is your best of the best. All you have to do is take a picture. If you're using TechSmith Capture, let's go through a little TechSmith here. If you're using TechSmith Capture, you have to sign in. Let's see if we can get TechSmith Capture up. There it is. All right, guys. So I'm going to pull up my TechSmith Capture, right? I've circled a tail. It lines up. My rules are met. I feel good about it. I'm going to click that big capture button. And every time I take a picture for class, I go from the top left to the bottom right. I want you guys to show me your entry chart. I want you guys to show me the chart where the first two rules were met. And I want you to click the camera. And this is your image preview, guys. You can use arrows to point out areas, right? You can use that shape to identify windows of opportunity. Most important thing that you can do, guys, is use this call out button. And I want you to write your rules on a chart. I don't want you to write just the rules that were met, okay? Write all your rules. Write all three. Remind yourself why you're getting into that trade. Identify your entry, guys. One of the best things you can do is actually use the phrase, I enter the market at the mid-band and support inside of favorable large triggers. Reinforce that good lesson, that rule number 3. And here's one that not everybody does. Tell me how you feel. Were you nervous? Were you relaxed? Were you excited? Were you anxious, guys? Because there's a connection between how you feel and your ability to follow rules more often than not. Once you get this information on the chart, upload it, this blue button in the bottom right-hand corner, and it's going to put your picture to screencast. And once you have that picture in screencast, you just copy the link, swing on over to the room, guys, Control V. If it's a pop-out, we'll paste it right in. And then just be patient. I'm going to get to your picture. We're going to have a conversation about it. Or maybe even John Novak, the CEO of the company, the guy that wrote the software, that wrote the plan, may come in and praise you a little bit and say, way to take those great trades. That always feels good. True story, guys. He's been my brother for 51 years, and I still get excited when he says nice trade. It's fun to take nice trades. It really is. The next thing that you need to do, because you know it was a rules-based entry, is bring it over to your spreadsheet, right? Put it in here. Make sure that you can come back and study this so that you can do this each and every day. Guys, that's your path. Taking pictures, learn the rules so it becomes easy to trade, right? Learn the rules so that they become easy, so they become second nature, so that you don't second guess yourself, so that you don't overthink, outthink yourself. Let the rules be the rules, guys. 3 rules. Don't add stories about colors. Don't add stories about things that don't make a difference. Keep them clear and concise initially. Use a checklist to keep it mechanical. Every time you enter the market, use a checklist. Remind yourself what you're looking for. I'm going to give you this checklist in the room right now. Remind yourself that you need odds favorable, that you need no termination conditions, right? Hold yourself accountable to these rules that have been proven to win more than they lose. For those of you that are brand new, for those of you that like to fudge rules, here's that same checklist with pictures stolen from the resource material, showing you exactly what they should look like on your screen, guys. And if your look isn't this look for strength, well, then you might be giving away the advantage of momentum, right? And if your clear path looks like this, you may not actually have a clear path. Check yourself, police yourself. And then the most important thing you can do, and this is an example of how to write a plan for your first 20 days, how to keep yourself focused on one thing for 20 days, focusing on entries. That's it. Nothing more than entries, guys. Show me losers with perfect entries. Excuse me. Show me losers with perfect entries, and we will virtual high five every time, guys, because it means that you understand how to get that great entry, and that great entry creates a manageable trade. Use the phrase, my trade is. I'm going to hit on this one a little bit, guys. If you come into this classroom and you see John Novak post a chart and you try to do what John Novak does, remember, he's 27 years ahead of you. If you come into this room and you see Ron post a chart and it doesn't look like a high probability trend trade, but you see Ron winning, guys, you have to do the study. You have to go back. You have to test it. You have to prove it. You have to create rules. You have to create your own checklist. Don't try to be somebody else, guys. Be you. You are unique and you are special, and let your trades be your trades. And focus on entries for the best trade before you start to deviate from your plan, right? Because this is a plan that's been proven to win 70 to 80% of the time. Is the market coming from a good top or bottom? In order to enter the trade, you must have the conditions of the checklist met, guys. That good top or bottom increases the likelihood of success. It's not mandatory. You can still have an awesome high probability trend trade with momentum, a clear path, and an area for entry. But when it comes after a termination condition on the 13-2, it increases your chances. Your job is to take those pictures, guys. Study them, steal them, grab them from the manual. But in the first 30 days, the more pictures that you take of your charts, the faster you'll get to where you want to be. Guys, if you take 20 days working on nothing but entries, nothing but following the rules, embracing the advantages, getting in at the proper spot, those create insanely manageable trades, guys. Management of your trade requires your ability to read charts. Remember, the first 20 days is teaching you to read those charts. So let's keep it simple in the beginning. Mechanical entries, mechanical exits, guys. Trade 2 contracts, initial stop will be 12 ticks. Your stop may not be 12 ticks because you're going to adjust it below or above the window of opportunity. That 12 ticks gives you reaction time to put the stop in the correct spot. Once the trade moves in the direction, you can move it 2 ticks above or below that reversal bar going with the trend. You can take profits at $100. Notice the language where I say I will. I will trade 2 contracts. My initial stop. Guys, this is your language because this is your plan. Own it and personalize it. Profits on the first contract at 100, at which point you'll move your stop to break even, which means that you get that dopamine kick. I'm a winner. The money's in the bank. They can't take it from me. I have nothing to lose. And it makes it easier to hold for that second target of 200. You're only looking for $300, guys. $300 on a high probability trade. $200 worth of movement. And if you can do that one time a day successfully, that's a $1,500 week. Guys, that's a $6,000 month. That's a $72,000 year on 2 contracts. Super simple management, right? The reality is you're going to have a lot of $100 break-even trades while you learn to manage. So if you do that 3 times a day, that's that same 72 grand. And I think everybody focuses on the money. Focus on the process that gets you to the money, guys. If you allow this to be your path for the first 20 trading days, you're going to understand how to read your charts. You're going to understand fluently where the market is likely to continue. where the market is likely to stop, and you're going to develop a sense of where the market is likely to go. And the idea is to build a foundation capable of winning consistently. Capable of winning consistently as you expand your knowledge base through repetition. 2 trades today, 1 lot, 25 points, $500 goal hit. Conrad, that's not a bad day, is it? Do that every day. How do you feel about $120,000 a year from 2 trades a day? Doesn't that make sense rather than chasing 20 trades? Guys, you don't have to be busy. You should be swinging golf clubs by noon. You should be at the gun range. You should be at the beach, right? You should be doing something other than sitting in front of your computer. The people that trade for 8 hours every day are the people trading, looking for everything. The people that are following a consistent plan, whether it's high probability trend trade or otherwise, these are the people that at 10 a.m. in the room say, I'm out of here, thanks. Right? I'm going to the beach. At 10 a.m. they say, all right, I'm done for the day. Goal hit. I'm going to go fishing. The people that are still here, still on their computers at 2:30 in the afternoon, those are the people that are chasing everything. Those are the people that can't hit their goal on a high probability trend trade. So they're trying to catch every trade, hoping that the market gives them something. Guys, we have high impact news, medium impact news coming up in just a minute. Let me give you this example plan as well, guys. 5 a.m. to 5 p.m., that's mission control, huh? That's a good looking setup, Conrad. Got your Topo Chico. What city is that? You hear me, Ed? Guys, if I say something that hits a little too close to home, listen to it. Because it's probably for you. If you hear me saying, guys, stop chasing everything, chase the best, and you're like, oh, I do that. I'm just making sure. Is that, you're still in Houston? It's been a while since I've been in Houston. Isn't that a nice skyline? It's so flat. I'm up here in the Pacific Northwest. We have hills up here. It's kind of cool. Guys, if you said to yourself, hey, I chase everything instead of the absolute best, then this talk was for you. If you say, hey, I want to trade like XYZ, I don't want to own my own trades, then this talk is for you, right? It's all right. Guys, this is a process. It's a learning process. Look at that market going down. That's your S&P, guys. News in just a couple minutes. There's crude oil. There's one of those 50-50 trades. Man, Conrad, we all do in the beginning. And why do we do it in the beginning? Because the reality is, the first 30 days, guys, the only thing that you're doing, and tell me if I'm wrong, we'll call it stuff rich people own. Because in the beginning, all you're thinking about is your Lamborghinis, right? You're thinking about your big crazy yachts and your golden toilets and your planes and your Bentley and all the things that you're going to do with all that money. Guys, everybody does it. It's a process. Guys, there's a reason surgeons learn to be great surgeons before they get paid, because it's the process of being a great surgeon that gets them paid. Great architects, great engineers become great at what they do before they start making money at what they do, right? You can't circumvent it here. You've got to become great at what you do so that you can get paid for what you do. And the process, and you know what, Safia, if you do this right, there's not a surgeon alive that's going to make the money that you make doing this. They do get paid while they're training. They spend 7 years. You don't get paid for college, right? You get paid for your residency. You're in college right now. But you know what I'm saying? You don't get paid until your residency, right, Safia? Am I mistaken? So we're in college right now. And here's how you get paid in college. You keep it simple, you keep it focused, right? You give yourself advantages. You focus on a trade that wins more than it loses, and that's your trade while you continue to study. You're enrolled in Nexgen College. I love it. Guys, look at this termination condition, and it creates a full reversal. And that full reversal gave us odds favorable momentum, but that odds favorable momentum is right into a termination condition. Doing this to snowball 100,000 into 1 million, you need to rewrite trading plan with Nexgen College. That's it, guys. Keep it simple. I talk to my brother every day, and every day we're just like, gosh, if people would just keep it simple, just let it be easy, right? He used to say, let it be obvious. Let it be obvious. Let it be obvious. What's obvious? Obvious is when everything is solid. Guys, here comes news in 1 minute. I'm going to take a break. I'm going to leave you with the S&P. We'll see how it reacts to news. It may not, but we're going to see what happens. And I will be back in just a minute, and we'll get into that second hour. We'll start looking at all your great pictures. If you have a question, post it in the room. If you have a picture, post it in the room. Guys, the second 2 hours, I don't want to talk as much as I talked in the first hour, unless it's talking about the stuff that you want to talk about. So when I come back, we're going to look at your charts, and we will start talking about rules even more. Back in a few, guys. All right, here we go. Back to Clown College. Man, Gary, that's a setup. 8 monitors. Oh, good Lord. You guys with attention spans amaze me. I think you'd be sad to see what my setup is. I've got two 32-inch monitors and a laptop, and that feels like enough for me to look at, but that's just me. All right, guys. Here's how it works. I have to scroll all the way up to the top to start looking at your pictures, and then I have to scroll all the way down to answer any questions. So if for some reason, and it may happen, it's happened before, if for some reason I missed your post, if I missed your picture, if I didn't answer your question, do me a favor. Just go, hey, Mark, I think you missed my post. Here it is. I'm going to repost it for you. Or Mark, here's the timestamp for when the post was. I never skip anybody intentionally, guys, except John Novak. I'll skip him sometimes, but I try not to. I try to make sure that I catch everything, guys. So I'm going to come in and I'm going to click on that first one. And Gary, I remember this one from this morning. I absolutely love this look. Gary's 13.2 is 50-50, right? It's strong triggers. Everything says down. The market says it's probably going to continue down. The first pullback doesn't get to an area inside of favorable large triggers. The second pullback has divergence, which means on a 50-50, we're giving up a little, right? And Gary says, probably not. And what Gary did is Gary identified the perfect look for when you need everything to agree. Strong triggers, areas with the potential to break. And right here, everything says down. Gary, that is such an outstanding. Every chart agrees, taking a shot at that trend trade that wasn't perfect for you, and then just giving it that best of the best look. Gary, man, that is such a good look. And then D, coming up next. Let's see what you did, D. D, you have... Is the market coming from a good top or bottom? It's not, is it, D? Let me scroll down so that I can see. Do you see how it's not a termination condition that created a full reversal? No. Remember that you would have this coming from a fib or one-to-ones or even a divergence high. This pivot on its own is not a termination condition. It's just a loss of momentum. And then you're coming down. Man, we got a lot of great lessons on this one. I'm going to take a picture of your picture. And we'll do a little annotation. So we're not coming from a good top or bottom. It has to be a termination condition that creates a full reversal. Odds favorable momentum, absolutely. That's the best of the best look. That's that smalls below the larger wide. They're angled in the direction of the trend. No termination condition. So D, you don't have a termination condition. And I'm thankful that you put no. What's the recipe? Do you guys remember? What's the recipe for a termination condition? The first thing that has to happen is price has to reach the area, right? Price has to reach it. We didn't make it. Yeah. So price didn't reach that area. Let me show you this one. I've got a picture in here that I've labeled termination versus target. But it's close. Man, D, in 10th grade, I came close to kissing the prom queen, but I didn't. She dated someone else. I can't brag about it, right? He had the car. What can I do? Price reaches an area, no triggers break, textbook termination condition. Price doesn't reach the area. Man, this is a target. It becomes a target. And D, let me show you why. And let me show everybody else why. And I love this conversation because this is a good one. And man, this is going to get new users into a lot more trades. So check it out, D. You ready? We didn't reach the area, right? And D, this is where you're saying, man, but it's close. And let's talk about why. If it's like one tick, D, yeah. But look at this. We are literally 5 or 6 ticks away. You can see it here visually, right? Man, that's close. There's no room. But D, remember that we are buying a pullback. How do you feel about the room to that close area from your area of entry? Not nearly as threatening, is it? Look at all that room that you have to get back. And that's kind of the idea. So these areas become targets. They're not termination conditions yet because price hasn't reached them. So when we look at your chart, where'd you go? When we look at your chart, we're still 6 ticks off, right? This becomes a target. And then, so you had odds favorable. You didn't have a termination condition. And now, D, let's go to window of opportunity. Your window of opportunity, if we draw that look from the highest point of the trigger lines to the lowest point of the trigger lines, and then we tighten it up from the highest point of resistance to the lowest point of resistance. And remember from the manual, D, our stop goes outside of that window, right, where the market shouldn't go. Do you notice how you have your entry a tick above a midband inside of favorable large triggers when the rules are met? This becomes a management lesson. So watch this. That's not what I wanted. You don't see it? Do you see the window of opportunity? I'll stretch it over. I can't see what price. You were 2 ticks above a midband. What did crude oil do after this? Did it go up? It went up, okay. And that's because of the bad top typically. So a bad top, let's talk about the entry first. The entry, you're really low, right? That's cool. You're at the bottom of the window. If you're going to get in this low, you have to be willing to ride it out. So D, from a chart reading standpoint, divergence doesn't change the trade at all. Not on a high probability trend trade. Divergence is a loss of momentum. A loss of momentum means that the market may push higher. It's okay to get that entry at the midband a little bit higher. Does that make sense? Just from an entry standpoint, this divergence, top of the window, totally cool. But what gets me here is this bad top, even with divergence, D, your midband is the first target. And this is one of those instances where it just may continue back up from that midband, right? It's just a trend trade. Yeah, so it's anything can happen. Bad top, divergence prints. My first target becomes this midband area. I think it's a good trade. Actually, I don't even think that it's a good trade. I know that it's a good trade. You've got momentum. You've got nothing in the way. You've got an area inside of favorable large triggers. Now we're just refining what is a good trade to maybe make it lower risk. Maybe you get in because of the divergence. Up here at the higher point of the window, it reduces your risk a little bit and it keeps you from getting stopped out at a potential entry point. Does that make sense, D? Great picture, great lesson. Cool. But guys, remember, this is a pattern that you're going to see a lot. When the market isn't coming from a good top or bottom, and let's see how often it happens. The trigger lines break through the area and it pulls right back to resistance and continues the trend down. That's a good bottom. There's a pivot that comes from the middle of nowhere. It pulls right back to resistance and continues the move down. There's that consolidation. Look at that. Termination, determination, determination, determination. Recognizing a consolidating market. Not a good bottom. Divergence prints. Check it out, D. Straight to the midband, right? A little bit of chart reading, a little bit of patterns. Bad bottom, divergence prints, right to the midband. Are you guys recognizing a pattern here? And there's that consolidation again. If I scroll back, bad bottom, divergence prints, right to the midband. Guys, the market repeats itself over and over and over. And it's pretty amazing just how often it does it. And if you scroll back and get some visuals, you're going to begin to see these patterns over and over again where the market isn't coming from a good top or bottom. And because it isn't coming from a good top or bottom, you begin to anticipate that midband as your first target. And D, this is the only time I'll have large triggers so close to a midband, and I'll treat it like a 50-50 trade. Great pictures, man. Great lessons. Thank you for sharing that. Guys, this is how we all get better. Show me your losers, right? Show me the ones where things didn't go right. And D, I'm still going to stick to my guns on this one. You had all the advantages in place, man. It was a good-looking trade. It just didn't work. And that happens sometimes. Let's see where we're at. Next picture. Guys, I get lost sometimes. Jose Trades, good morning. You skip the 50-50 because it's not from a good bottom. Large charts don't agree. Termination condition textbook on the top, right? 50-50, split triggers. Jose, great patience. And no matter what happens next, right? It wasn't your best chance of success, so you chose not to take it, so there's zero regrets. You're welcome, D. And then Gary, here's a picture of the exact same one, right? Gary says, well, I'm willing to take this one because of the small window of opportunity, because this 8 range agrees with it, because of the strength of the triggers, it has the potential to break. It's the exact same trade, guys, and it's okay. Some of you will take it, some of you won't. There is no right answer. It all depends on what your plan is. What does your plan say about 50-50 trades? Does your plan say if it's not coming from a strong bottom or a top that you're going to choose to skip it? And if that's your plan, that's totally cool. Zeba, let's see what you got. Zeba taking that momentum trade. I love that you labeled it momentum trade. So Zeba, let's see, that's gold, that's gold. I'm assuming this is a 21. This is a 13.2. This is a 5.1. No, because it's a momentum trade. It doesn't have to be, right? And Zeba, we talked about the momentum phase yesterday in the trigger lines. Do you see how your 13.2 has anything can happen triggers? So that's not momentum, right? So the name of the trade is momentum, but there was none present, which makes it difficult. Up here above the fib, you had momentum. Up here, you had bars outside of the triggers. I'd rather see this trade, Zeba, coming from about right here and taking your quick 10 rather than waiting for everything to slow down and then hoping that it continues down. Does that make sense? This divergence said that you lost momentum. These trigger lines said that you lost momentum. So it's a momentum trade without momentum, which becomes a little more difficult to manage. No worries. So you were waiting for a trend trade. When it didn't make it, you jumped in for the momentum? Right on. Does that mean that you broke your rules? Okay, as long as you know it. It worked out for you. You broke rule number 3. Well, you didn't have rule number 1 either, which is part of the challenge. You didn't have momentum in that trade, but Ziva, it's a good look, right? I think that if you're looking for that momentum style trade, though, it's a better opportunity when your 13.2 is absolutely screaming. Give that advantage of momentum as it moves. And it's going to help you out in the long run for sure. Great picture. Thank you for posting. Guys, there's good lessons everywhere. There are always good lessons in every picture, win, lose, or draw. All right, Ron. Makes me nervous when Ron takes trend trades. Termination, large triggers never blinked. So he's saying this is a market likely to continue down. So he waits for every trigger line to be pointing the same direction, takes the pull back to the area, takes it down. Not the best momentum, but every trigger line on every chart agrees for the trade. Ron, nicely done on that one. Sipping around over coffee. I like it. You took the same one? Nice, Safia. Jose, are you with me? Bobby T, not yet. Let me draw a line on that fib. Have the large triggers broken it yet? One line has, right? But not both. And when we go back to termination conditions, both small and large must be above the area to consider the area broken. Both small and large have to clear for that area to be considered broken. So we're still in 50-50 mode, Jose. It's a better look than if they were all the way down here. No, it's not. That blue line is coming from your 21.3. That is a 21.3 area. Not random. Guys, nothing on this software is random. They are all determined through thousands of calculations, identifying. What happened though, Jose, is what's the timestamp on this trade? Right at 10 o'clock, right at that fib update point. And it only goes a little bit because this was your 21.3 and then it adjusted at the fib update. So still 50-50. And that's just going off of definitions. That's me not introducing any of my opinions. Nothing more than how do we define a 50-50. So until those large triggers get above, I don't consider the area broken. The large triggers and smaller above this area, I consider that area to be broken. Great question. Gary, looking for that 50-50 area support inside of favorable large triggers. Little pre-trade picture. Ed, whoo, got them all bunched up. Let's see what you did here. Ed, taking that same one, the termination condition. Triggers don't blink. Everything says down. You wait for every trigger line to agree, and you take that pullback to the area. Great job, Ed. Beautiful trade. Great patience. Waiting for everything to roll. And then putting your stop at an area inside of favorable large triggers. And I'm assuming it came to get you. Protecting yourself for the cash open. Yep. Well, you chummed the waters there. That was 50 gallons of dead fish getting dumped into shark territory, right? You put a stop right below every bit of resistance. It's around 9:15, Jose. So I like the trade. Gotta commit, guys. If you're gonna trade, you should be entering because you believe in the advantages. Zeba, are you in the room so I can answer this question? I believe it's in the upper right-hand corner, File, New, Trade Performance. And it'll show you where you're at in trade performance. I don't have NinjaTrader 8 up. Let me see if I have a picture that might help, just to get you in the right direction. Go New. Nope. Maybe it's Tools. Under Tools, Trade Performance is what you're looking for. I'm sorry, I don't have NinjaTrader 8 up. I can pull it up real quick. Oh, I don't mind helping out. That's what the class is for, right? It's not just for trades and charts. Sometimes it's for just putting you in the right direction. I've got it coming up right now. No worries. Just takes a second. All right, so from NinjaTrader 8, you're going to go New, Trade Performance, and then you'll adjust the dates to whatever you need them to be. So it was New Trade Performance. And that'll get you where you need to be. All right, who is next? Great pictures today, guys. Ed. Look at that. Right to resistance inside of favorable large triggers. I'm glad you took that picture, Ed, but I want you to change the annotation. I want you to change just rude to something clever like, why on earth would I let fear put a stop at an area of resistance inside of favorable large triggers? Because just rude isn't owning your trade, right? Just rude is blaming the market for a bad decision, guys. Stops have to go where the market should not. So Ed, change that annotation. Own that one. You made a bad decision on stop placement, and the market rewarded your bad decision with getting you out of a beautiful trade. Oh, so close, Jose. So close. And look at that. Now I like it. See how that right there? They even waited for you, and then they didn't give it to you. That's rude. Ed, that's rude. Not giving Jose his entry. Big difference. The market being a butthead. Poor stop placement. Good job, guys. Jose, sorry that one didn't get you. Some days you're the boot, some days you're the bottom, right? Bobby T. And guys, I want you to remember, if you have a question about somebody else's chart, if you see somebody else doing something and you're like, man, why did they do that? What is this? What was that read? Isn't this XYZ? Raise your hand. Use your voice. Let me know. Missed you too? Yeah, Bobby, that was a perfect setup. It just didn't do what it was supposed to do. Gary, there's both of those entries, right? And then there's your odds favorable momentum. Guys, this is not a high probability trend trade. This is just a trade where every chart agrees with going down. Every chart says down. Every trigger says down. You're coming from resistance. It's a bad bottom. There's that continuation look to the next area. It's not high probability. But it's hard to find something that isn't in favor of that trade. Z recognized it. Great job. Z, you took the momentum first, right? Everything said it was going down. You take one quick entry at resistance likely to hold. Get out right at resistance. Didn't get filled here. That means you got greedy and put your target in the wrong spot. And then here you corrected and you got paid. Z, great trade. Somebody even gave you muscled up. Ron gave you a muscled up look on that one. Dude, that was great. Great trade. Safia, beautiful trade. And then once again, guys, stop placement. Can we talk about stop placement? Don't put your stops where the market's likely to go, guys. Safia, if you're with me, Ed, this is for you as well. If you're saying to yourself, I'm going to exit this trade because of divergence, because of the trigger look, get out with divergence, right? Save some money. Otherwise, commit to this trade. You've got odds favorable with nothing in the way on the 21-3, right? You've got every trigger down. You've got every trigger below the area here. This is that area. Sometimes, guys, you've got to leave some risk on a trade. Putting your stops at resistance that's likely to stop the market, you're just asking the market to take you out of that trade. If you don't trust this look enough to stay in the trade, it's all right. Get out at that divergence low and say to yourself, I'll re-enter if everything gets going. But guys, this was from 37 all the way up to 40, 50. So that was almost 4 points that you gave back and then exited right at the entry. It's a great trade, Safia. It's beautiful. I just think that there's a management lesson there. Thank goodness, right? If there weren't management lessons, what the heck am I going to do all day long? Gary, termination, just waiting for those areas to clear. I love it. I love taking pictures of trades when there's not a trade to be taken. And then Safia, right into that termination condition. You say with no divergence, you'll take a shot and quick profits. Let's blow this up. It's a termination condition everywhere, isn't it? It's a termination condition on every chart. Yesterday we had a talk about the market likely to push down one more time. Rain, I think that was with you, right? Odds favorable momentum, no divergence, strong triggers. Yeah, these super strong triggers, smalls accelerating out, no divergence, strong triggers, and supported by those really strong triggers here. This is one of those instances. It might rocket up to the moon, right, Safia? You understand the risk that you're taking, but because of the momentum everywhere, because of that little window of opportunity, it's probably at least going to retest support. And that no divergence is a very, very key part of this one. Safia, I think that's a beautiful trade. I think it's a calculated risk with the momentum, and I think you absolutely nailed it. I don't advocate trading in determination conditions, but if you're going to do it, guys, that's how you do it right there. That's the one. No divergence. Let it be perfect, guys. Do you remember when we talked about that? If you're going to give away an advantage, don't give away any other advantages. That's Exhibit A. And then Gary, termination, pivot stop out at resistance. HVA line right there at those small triggers coming down. Good looking HVA trade, Gary. And then termination condition for the win. Beautiful execution. Gary, solid trade. Nice job. Mike M. Oh my goodness. Look at that. Mike M, 50-50, no divergence. And you said, man, let's get paid today. Great trade, Mike. The only thing that I could say about this trade, and man, this is nothing, not poking stones, is with this much momentum, I am so willing to let it get to that next area. With this much momentum on the 13.2, man, I have no reservations about holding that last contract for a fib. Letting that 13.2 dictate. Gosh, that's a pretty trade, though. Nice job. And then this one, same as everyone else, right? That resistance held. Those large triggers didn't blink. Every indicator agrees. Boom, boom. Just wanted to hit your target. Then that's perfect, right? Target reached. Mike, you don't post a lot in here, but when you do, you sure put on a clinic. Nice trading. Advantages everywhere. All charts agree. All indicators agree. It doesn't have to be difficult, does it? Work gets in the way. I get it. You keep trading like this will be work, Mike. This is going to be your job. But you see how everything agrees? The momentum's there. The areas are there. The triggers say. Everything. Looks like crude oil. Ziba. It means that you have to be patient, guys. It means that you have to wait sometimes. Wait for those advantages to be present, but when you do, life tends to work out pretty easy. I firmly believe that. That when everything agrees, when the momentum is there, Gary, were you bouncing around different markets all over the place? Is that why you missed it? Because that's resistance, right? A couple ticks below, but it's after the fact. It looks like that sell limit got there after it hit. And then here's a question. If you love this trade, does 3 ticks matter? That's okay. It happens someday, especially when you can't breathe. Man, when my lungs were toiling, I felt like the world was walking through molasses in January. But man, Gary, you already had confirmation. You had everything. There are instances where I'll just hit sell now because my stop is already established through market flow, right? Everything is good for the trade. It's okay to do that. 3 ticks is cool. 10 ticks, well, 3 ticks isn't chasing on this one, is it? Your confirmation was at 28.75 down here. You're actually getting a better price than you would have with confirmation. What's chasing? Chasing is missing it here and getting in right before your target, right? Not leaving yourself room to trade, not leaving yourself room to hit a target. Whoops. Chasing is getting in here instead of at the best. Yeah. Because, Gary, I used to say it too, but I think that that's one of the things where 2 ticks, not chasing. 8 ticks, yeah, dude, you're chasing for sure. Great picture. Sorry that one didn't get you, man, but it was a solid read. It was areas. I mean, it was clear path. You gave up momentum, but, dude, you had your area. You had confirmation. That's all right. For me, sometimes just having the right read makes me happy. Even if I don't catch it, I'll take that picture and commit myself. I'll get it next time. I'll get that trade next time. All right, Safia, let's see what you got. We got a slow link, right? Feed the gerbils. Here it comes. There we go. Let's see. Safia, you take the short, right? Get paid. You take the next short, get paid. Everything says down. You take the next short, get paid. Safia, how did it feel? Can I ask? When you're taking these trades, when every chart agrees, If you had to give me one word to describe your state of mind as you're taking these trades, what would you say? Calm. Gosh, Safia, I wish I was in the same room with you to high five you. These are beautiful. These are with direction. These are with momentum. And even when there was an issue in the way, you refused to give up other issues, right? You're saying one issue's cool. I can work through that. Boom, right there. Great trading, Safia. Guys, I get proud dad moments every now and then. When you guys come to the room and you take the lessons and you put them into execution and all your trades look the same, and you tell me, hey, Mark, I felt calm. I felt good with this one. Everything's kind of coming into play. You rewatched tops and bottoms and it made sense. Today is practice. So guys, this is the video that she's talking about. Where did he put it? There is a tops and bottoms video. Fibonacci and trigger lines. Guys, this is a good one. Let me give you the link. This is a good one. This isn't the one that Safia was talking about. Let me come to my Discord. And let me go to my 101 and go to trigger reading. And oh my gosh, I can't find tops and bottoms. There we go. So guys, in Discord, under short version, tops and bottoms, let me open it up in YouTube and let me give you that link. Guys, this is one of those instances where I never say, do what someone else is doing. Don't trade like somebody else. But if somebody watched a video that sparked a light bulb for them, that had them trading like this, go watch that video. Go watch that video. Holy smokes. All right, D. I like this. Solid top. Termination creates a full reversal. You get momentum. You get momentum without divergence. You're so welcome. I'm not sure what this entry is. I'm not sure what rule that entry follows. But I'll tell you what, it never blinked, right? That termination condition, you had strong triggers, but the large were up. You hadn't reached the mid-band. D, that's the key. You take that little pullback. I like it. I'm not mad about it. No need to jump ship yet, right? No indication that the market isn't going to do what you thought it was going to do. I like it. Termination. So guys, do you remember we talked about management the other day? What changed? Start asking yourself that question. When you enter a trade and you feel compelled to move your stops, when you feel compelled to jump out of a trade, when you start getting nervous about things but you're not sure why, ask yourself those two simple words. What changed? What changed? What has me worried at this moment? D, what changed? Nothing. And it's okay. Trust what you see. I should have allowed this one to play all the way out. Guys, it's okay. Those two words saved my life. And D, I traded like you. I'd take 25 trades in a day. I'd be up 24 ticks at the end of the day. Because I never asked myself what changed. I never went with those advantages, and I never stuck with the advantages. So I started asking myself, what changed, you know? I got into the trade. I don't. Man, I wish I did. So if you entered right here, what changed? All the way up. Nothing, right? That's a good example of it. That's that one you guys didn't get filled on. Everything says down, and you ask yourself, what changed? And if you start answering that question, management becomes easier. But guys, remember that management's the second part of it. Management is the second part for those great entries. Great lessons today. You don't understand these 5-1 charts without the 13-2 large triggers? I don't know, Rain. I don't know why they don't use them. I guess they're looking over at the 13-2 triggers, and some people have that connection without the 2. Rain, I'm very much like you on this one. I like the visual of them both there. I'm a huge advocate, a huge supporter that I believe favorable large triggers, the 2 working together in symphony. I believe that there's a great, I don't know, Rain. You'd have to ask him. He says that if he has a good top or bottom and odds favorable momentum, which he didn't have yet, no termination conditions is true, area for entry inside of favorable large triggers, it doesn't meet most of his rules, right? So this isn't... Do you see how this one doesn't fit the checklist though, D? And Rain has a great question. Yeah, what are the rules? So instead of relying on a high probability trend trade checklist to get you into the trade, D, it's cool. Change it, write it. Tell me what got you in. No, I know you're not. And I'm the same way, Rain. And this is one of those things. So why did D do it? I'll answer it. I'll annotate it. Right? Small triggers broke below the large, changing the trend from a termination condition. So the faster momentum indicator, the small triggers, is vertical and steep. That would be the first thing, the termination condition and the trend change. Small's below the large. The triggers are rolling here. There's no divergence coming from a termination condition. It's just the first shot at going short, Rain, is what it is. Typically, this trade comes from the pullback to the mid-band. No, because you really don't even have it here. This is the first shot. In Rain, it's not a high probability trade. It's a lower probability trade. This trade comes from a mid-band at the small triggers, the way that it's taught. And guys, this is one of those confusing things, and I'm going to remind myself that I don't have to do what someone else does. Guys, just because somebody posted trades in here doesn't mean that it has to be your trade. Just because someone shows that they trade the NASDAQ in here doesn't mean that you have to trade the NASDAQ. Just because someone takes a high volume area trade doesn't mean that you have to take a high volume area trade. If you let your head swirl trying to figure out why everyone else does what they do, rather than focusing on what you want to do, you're going to drive yourself nuts. You're going to go crazy with it. So, Rain, the short answer is this is a momentum style trade from a termination condition that was taken late. I don't understand the entry either. But I don't have to because it's not my trade. But I can read the indicators that it was a termination condition, that the shift in momentum did happen, that the smalls are below the large triggers, that there was a divergence-free pullback. A lot of these are great. I like them better from a fib. So I can read the charts and understand why he did what he did, but it doesn't mean that it has to be my trade. I don't take this trade. I don't care for it because if I get in at the right spot, I typically get stopped out. These trigger lines didn't roll yet. I don't care for it. These trigger lines didn't roll yet. I don't care for it. I'm willing to miss it. And Rain, if you're in a position, oh my God, do you want to know why John Novak does it? Because John Novak wrote the software, because John Novak has been reading these indicators for 25 years. What John Novak sees on a chart, guys, you're not going to do for the next 5 years. It sucks, but that's what it is. I could put you in the exact same car as Mario Andretti and he would lap you every 3 laps, right? Guys, I could give you the same clubs Tiger Woods hits. You're not going to shoot a 68 unless that's what you shoot. There's a difference in expertise that creates a divide, guys. And if you try to do what somebody who has more experience and reps than you does, you're going to get confused, right? You're going to chase things. You're going to take trades, but you're not going to be sure why you took them. And guys, that is so detrimental. Make sure that you understand what you're doing and why you're doing it. And D, that's why I would encourage you, don't use a high probability trend trade checklist to take a trade that isn't a high probability trend trade. What this says is that you're willing to ignore every rule that you put in front of you. Joel, testing my eyes, right? Termination condition, odds favorable, perfect entry inside of favorable large triggers. Rules based 100%, Joel. Great looking entry picture. Gary, termination condition, odds favorable, didn't reach the area yet. You're a tick off, and you made the choice to not take it. No worries at all. One tick off, though, guys, that's where you have to make a decision. Can we talk about the decision? No, Rain, don't apologize for asking questions. I encourage you guys to ask questions, even if it's not your chart. I say it every day. I think that it's important, and sometimes it just results in me saying it's not a trade, right? But let's look at Gary's chart. And I want you to see where the potential trade comes from, right? Termination, everything starts to roll, everything starts to roll. Do you see how Gary took a pullback to an HVA line right at the small triggers, Rain? So there's a little more clarity, a little bit of patience, and there's that high volume area pushed down. Beautiful trade. Doesn't that make it a little easier to recognize if you add in that other chart? That adds a little more giddy up to this potential trade, a little more confidence. And it pulls right back to that high volume area. So Rain, that's a great second trade. After you go after the high probability trend trade, go into that HVA trade, that trade that utilizes those tops and bottoms. And this is the simple way to do it. I'm still not a fan of the momentum trade coming off the top or bottom. I think it's inconsistent. I think it's a low probability winner. When it does win, it wins huge. When it doesn't win, it takes you out quick. But using this high volume area trade, Rain, let this be your next trade. If you want to get outside of that high probability trend trade, if you want to get outside of that medium probability, I love this trade. This trade is confidence inspiring to me. And the cool thing is it uses the same elements that the trend trade uses, right? It uses termination conditions that you're great at recognizing because of your trend trades. It uses trigger lines that you're great at recognizing because of your high probability trend trade. And it uses an area that's clearly defined, just like you do in a high probability trend trade. So Rain, man, if you want to go back and study this one a little bit and take some pictures, start bringing them to class, and you and I will do sessions every day in this classroom about high volume area. And if you let me know that that's what you're working on, if I see them, I'll take pictures and bring them to class as well and see what I can do. I love this trade. I really do, guys. And I'll take this trade every time it sets up from a termination condition at Fibonacci and triggers rolling. It's a great first shot, and it's got a little more confirmation. And that was beautiful execution, Gary. Nice job on that one. And then the whole direction I was going, sorry, I got on a tangent, is one tick off, right? And Gary says, man, I'm just not taking this trade. It's a tick off. They're areas. So Gary, when I look at a trade like this, oh, no problem, man. Divergence helps, right? Coming from an area, it helps even more. Guys, good tops and bottoms. I don't care where you're at in your trading. Strong tops and bottoms create advantages. Gary, one tick off, crazy momentum, right? One tick off, crazy momentum and no divergence. One tick off, No divergence, crazy momentum right back to an area. This one might be worth taking and managing assertively. But it's easy to get rid of the maybes when you follow rules and make money, isn't it? Has anyone else recognized that? Guys, when you slow your roll, when you follow rules and you're making money, isn't it easy to not worry about the iffy trades? Isn't it easy to just sit on your hands and do nothing? Look at this. Everything says up, right, Gary? And you take the pullback to areas and you make it all the way up. Beautiful trade. It's just a trend trade based on a higher time frame. It's another HVA trade, look. Everything says up, pulls back to support, pulls back to support, pulls back to support, pulls back to support, pulls back to support. Everything agrees for the trade, and I'll be good gosh darned. The trade worked out pretty well. Nice trade. Isn't it fun when you follow rules? Safia says, all right, now my biggest chart reached a termination condition. Now I don't have crazy great momentum. Now I'm going to sit on my hands because those advantages aren't present. Safia, great read, great patience. And then Joel, once again. Joel, I love that you use a checklist every time. Odds favorable, no termination conditions. Yep, pivot stop out at resistance. On your chart, it's not the best top. It's a termination condition that creates a full reversal. Your perfect entry, you identify the trouble spot, you take it, and you get out break even. Man, Joel, beautiful execution. Guys, do you know what you do? When you take a trade that fits rules, I want you to do me a favor. When you take a trade that fits the rules, write on your chart, I can do this, right? Guys, when you take a trade that fits your plan, remind yourself that you just did something great. Remind yourself that you followed rules. Remind yourself that you managed great. Celebrate victories, guys. So often I see people, it's like they're looking for a kick in the teeth. Don't do it. Celebrate. Entry was 5 seconds. Could not move the mouse fast enough. No problem. Gary, you ready? You're going to hate that I did this. Gary, I'd miss shit all the time. Pardon my French. If I had this much to look at, I would miss trades all the time. I'm not that smart. That's just me. Easy when you have implants? I don't know what that means. Zeba, what do you mean what happened? Yeah, see, and some people can do it. Okay. I got you, Joel. Okay. Yeah, Gary, your brain works different than mine. That would confuse me. You're good with it. Rob K. Man, welcome to the family, Rob. Thought I saw your name in there. Odds favorable. Everything says down. From termination. Picture perfect entry. You've identified your first trouble spot. Rob K, is this your first trade? First one in the room? Because this is beautiful. So Rob K, when I see a perfect trade, I hope you're not real possessive. I steal it and I put it in my spreadsheet because I want to do what you do, man. I saw that. Welcome to the family. I'm glad that you did. And I put something clever like Rob K, perfect, trend trade short. So Rob, you are immortalized now. What you just did is what I want to do every day. I want the advantage of momentum. I want it coming from a termination condition. I want an area for entry inside of favorable large triggers. And man, I love this target. You're not hoping, you've got it above the problem spot. Congratulations. Let's do this 1,000 times until it's easy, right? Let's keep doing it. Keep taking those pictures. Rob, fill your spreadsheet. It doesn't have to be difficult, guys. You don't have to fight. Take the best of the best. Let the market give it up when the market's giving it up. When the market's not giving it up, sit on your hands and relax. I got lost. There it is. We're good, we're good, we're good. Joel, we saw yours. Gary, we saw yours. Let's see what we have, Gary. Termination condition pushes it back to the mid-band, back to support, back to support, back to support, right? It's not a high probability trend trade, but what it is Gary says when the large triggers don't follow, price pulls back. There you go. That's potential, right? Good read, Gary. Debbie W., let's see what you did. Debbie, momentum style, right? Price breaks, snaps back. Beautiful entry, virtually no risk. You're in that trade, it goes to the first area, and you're saying to yourself, well, you know what? Everything says down. Notice that Debbie didn't put a stop where the market should go. Gets paid at the next area, and let me scroll to the right. Debbie, interesting choice for that last target. And I know that you have a reason, but why a point below stacked areas of support rather than a tick above? Just curious. This is only for me. This isn't a lesson. I think you executed beautifully. I think you could have added on right here even. Okay. Guys, I love these pretty blue lines. They make great targets, and there's nothing more frustrating than hoping that a blue line breaks with weak triggers to get that target on the other side of it, especially if it bounces up quick, if that reaction is fast. Nature called. Well, don't ever ignore nature. That's a surefire way to make your office uninhabitable. Great stuff coming from you guys today. Wow, we ran over. It's already after 11, isn't it? Marshall Money. You're welcome, Debbie. Marshall Money took that 50-50, right? Making money. Everything says down, took that entry, making money, making money. Oh, and then, Marshall, you got greedy. You got greedy, Marshall. Weak triggers, nothing through. And you said, man, I better give it one more shot from the wrong side of everything. And you held on to it for a long time. That's all right. Isn't that funny, though? Look at this. Momentum, everything says down, down. Clear path, everything says down, down. No momentum, no clear path. Boink. And there it is. That checklist might have helped you there. That's all right. Great trading on the way down. And then Marshall, do you see how eliminating the maybe trades, how eliminating the rules breaking trades, all this money is in your pocket, right? That's 3 points, and then you gave some back. So let's just say 4 points on this one, right? Another 2.5, and then another 7. So we'll call it 9, 11 points. And you gave half of your profits back on a hope trade. And I'm not picking on you, Marshall, but I had to do this too. And one of the things that I realized is that no matter how awesome I traded, when I start breaking rules, I undo all that hard work. You gave half of your profits back on a trade that didn't come close to meeting any of the conditions. That's how I would annotate this chart. You know what you did right all the way down. Annotate your chart. Guys, this cost me half of my profits on the day. I should be swinging golf clubs, but instead now I'm looking for trades, trying to make up for the mistake I made. And that's okay, guys. You're going to make mistakes. And then Gary, everything clears, no divergence, pull back to the area. Beautiful entry, money, money. Nice job. Gary, I think NASDAQ suits you. You're killing it on the NASDAQ. This would be one of those times where I say celebrate, guys. Celebrate, celebrate. Sophia, we do have that little bit of overrun, right? There's some odds favorable momentum. And that's it. Notice how it hits the area, Sophia. We reach resistance. Look how far below the triggers are. A full bar. It may be retesting. It may be breaking. We don't know yet. It's too soon to tell. No clear path to the upside. 3 divergences from the upside. Potential termination condition. Man, this is a great time to remind yourself that you don't have to be first, that you can just sit on your hands and wait and kind of relax. There's no reason to worry, not yet. Just hang out. When you make money like that all the way down, you don't have to hope that this resistance breaks. You think it's a testing? Is that the ES? Guys, you've kept me so busy, we haven't even looked at the large charts for a while. So gap theory gets you back to the triggers, right? And then once gap theory gets you back to the triggers, now we have a pivot stop out with every trigger line above it. I'm paused. Guys, give me a Y if you can hear me. Oh, yeah, I was over here. I got you. Cool. So see how this works? Guys, let's talk about this pattern. Sophia, thanks for the lesson. Here we go. And let's ask ourselves, guys, good top or bad, good bottom or bad bottom? Strong bottom or weak bottom? That's weak, right? Everything made it through. Yeah. Price accelerates from those trigger lines, fast and far. There's your Fibonacci line. Notice how there was room for a full bar to get back to those large triggers? Guys, this is your gap theory. You guys remember the gap theory? It's weak or bad or naughty or yucky or not strong. Yeah, we'll play the synonyms game on this one. It's not strong, therefore it's not strong. And what happens from not good bottoms? Typically there's a push up because price reacts to Fibonacci, and a lot of times it comes back down. It either retests and does the pivot stop out thing, right? But when the large triggers don't follow, guys, price accelerates away, hits Fibonacci, even if it exceeds it, the large triggers don't follow, it's likely to snap back and close that gap, which means that if you try going long here, you're probably getting run over more often than not, right? Does that make sense? And now we're back into it, right? We've got no triggers through a divergence low, and I've got no triggers through a high, and I've got flat synthetics, and I'm in an uptrend, and I've got a pivot stop out. Guys, we're in a holding pattern. Look at the trend for the whole day, though. We had it here, too. We had it here. We're in a downtrend for the day. Guys, if I'm going to look for longs, These trigger lines better roll and give me odds favorable momentum and a clear path. And if I'm going to look for shorts, every trigger line better agree and be on the other side of this right here. Otherwise, I'm hoping. I rarely make money with hope, guys. Jose, termination condition. Not just one termination condition, two termination conditions. And then you take the entry and you take the exit at the termination condition. Jose, are you with me in here? We talked about this earlier. And then rain, I think this is that same thing that we talked about. With this much momentum, Jose, dude, you're trading into a brick wall of nastiness. But because there's no divergence, because there's strong triggers, because there's that one-to-one, that mid-band, you take a shot at it, right? You say, I am willing to forfeit my clear path because everything else says that I have a shot, which means that I have to manage it aggressively, which means that from your entry, that's the perfect exit, right? And all that trouble, and you're not willing to lose into it, Jose, beautiful execution of trading into a termination condition. Guys, give me a Y in the room if you recognize. This right here says, holy smokes, what the hell am I doing? But because there's no other advantages forfeited, you can take it. You can manage it aggressively. You're going to get run over. You're going to get run over like somebody's mad at you about half the time. But if you're going to do it, guys, that's how you do it. Jose just gave you the perfect picture of how to break that rule number 2, making sure that no other advantages, or he has 0 ticks to play with because he's reached a termination condition. Guess it depends on how you sell it, right? But from his entry, it's only 12 ticks to the fib. He has 12 ticks from his entry to that area that stopped the market and created a bounce. So I don't know what you were risking, Jose, but you were risking whatever you risked to make 12. But no divergence, strong triggers, little window, tons of movement coming from the top, you know? Guys, this is a calculated risk. This is jumping off of that 30-foot cliff at the lake into 5 feet of water and saying, I'm pretty sure I can not break my neck if I just. Jose avoided a broken neck, made a little money. Great execution, Jose. I think that has to be said. The trade gives away advantages. The execution is flawless. I love it. Putting on a show. Now we have a pivot stop out, right? If this is really going to be a bottom, if it's really going to turn the market, guys, these triggers are going to roll. You don't have to be first. So I'm going to take a break. I'm going to take 5 minutes. I'll be back. If you have a question, post it in the room. If you have a picture, post it in the room. We got through all of your pictures, which is pretty awesome. I'll be back in about 5, guys. Last hour belongs to you. I want you to talk lots, give me a lot of questions, and I'll try and give you every answer that I can. You're going to walk your cat. I like it. Have a great walk. I'll see you guys in just a minute. Oops. All right, guys, let's get into this last hour. Sorry, I just killed my screen on you. And now we're back. All right, last hour belongs to you. John Novak says, this is my hour. I'm going to post a picture. Guys, watch this. Termination conditions. Not the best top, right? Trigger lines go through. Market comes down. Termination right there at the pivot stop out. Market comes back up. Retest those fibs. Absolutely no trigger lines break through. John Novak says, this is my cue. I'm going to take that momentum trade. Smalls begin to break. Price breaks through. Gets a stab back to those small triggers right at the mid-band. And man, makes money all the way down. John, that was a beautiful trade. That was a great chart read. What do you guys think? Termination condition causes a full reversal. Full reversal. Whew. There may be something to it. Maybe something to it. Can you guys hear me? Just making sure. Yep. Guys, what are the common threads from today? Let's think about it. I don't know if you guys look at everybody's posts. What are some of the common threads for the day? The first one, the thing that stands out most to me, is I would say 90%, 95% of the winners today had momentum, right? Most of the trades that we saw today had momentum. They had the advantage of smalls outside the large, that space between the two. The next thing that sticks out to me, guys, is that most of the trades today had the advantage of a clear path. And the ones that didn't have the advantage of a clear path didn't forfeit any other advantages. And I know that I sound like a broken record, and you're like, oh, Mark, stop. I want to be active. I don't care about making money. Guys, if you use this simple high probability trend trade checklist, it's going to teach you to read your charts. And once you learn to read your charts, you begin to recognize patterns. And once you begin to recognize patterns, you begin to have a tremendous amount of faith in these strong tops or bottoms. You begin to have a tremendous amount of respect for termination conditions. You begin to recognize patterns like when it's not a perfect termination condition, that mid-band is your first potential area, right? When the trigger lines try to break through, that mid-band becomes your first area. When the trigger lines don't break through, guys, look at crude oil on the day in this one picture. Pivot stop out, reverses the market all the way down to support. Support takes you all the way to a bad top at resistance. A bad top at resistance takes you back to the mid-band, the same way a bad bottom takes you back to the mid-band, and it continues the move to that next key area. It's a bad top. It comes back to that divergence low in the mid-band, and then the buyers push it up and they retest right at Fibonacci. And when it's that textbook termination, guys, look what's happening. How many times do you need to see it to believe it? That's really the question, isn't it? How many times do you have to watch this happen before you trust it wholeheartedly? Are you okay with the market not giving you an opportunity, guys? This is what you have to ask yourself. Simplicity. So since you guys aren't posting questions, I'm going to review your path. Here we go. What's your path? I'm going to give you this, guys. This is from John Novak and I. Waking up early on a Sunday morning, drinking coffee 3,000 miles apart and talking about how do we make it easier? How do we make it easier for Nexgen users? Well, guys, to minimize your learning curve, post your pictures, trades in class, every trade, win, lose, or draw. When the rules are met, Safia. How's that for an answer? How do I add on? Let's do this. So Safia, let's say hypothetically, this is your entry, right? And you're trading 2 contracts. And you take one of them off here. But what you've told yourself is, you know what? This market's probably going to keep going down. I'm going to hold that second contract. And I'm trying to see if I can find your chart. It's easier with your chart, right? So Safia, you're in here, right? You take your first profits, and you know you're holding for this next fib. Everything says you're holding for the next fib. So that's the first thing, is it has to be a trade worth holding. Wouldn't you agree? You entered 2. You took profits, and you're saying, man, here's my next one. This is where I'm taking off. Is there any reason, Safia, that you can't add this one back on at a mid-band when everything says it's going down? And that's all it is. Is it saying that I'm in a trade and I've already taken profits because the trade is so powerful, because it's doing everything that I want to do where the rules are met? So let's see if we can find a real world example of it real fast. Wow, termination for the win. I'm going to see if I can find an example where it's clear. All right, so Safia, let's say hypothetically, you enter right here at the area of resistance inside of favorable large triggers when everything's said down. Pretty good, right? And then Safia, you take profits right here on one contract because everything still says down. And we're assuming for the sake of this that the rules are still met on the 13-2. So wouldn't a pullback to a mid-band inside of favorable large triggers be a rules-based entry? And that's what I ask myself on an add-on. So right here, I'm into contracts. I take one off at support, right? And then right here, and here's the key, all my rules are still met for a high probability trend trade. And we'll just say that's the one you're looking for. I will have a limit order waiting at the area inside of favorable large triggers. So if I do that, what am I doing? Whoops, that was the wrong one. Add one back on, right? And then here at support, take one off. And then maybe this is my final target. Take second off. Does that make sense, Safia? You're into, you take profits, money, money. The rules are still met, so you put that contract back on. You say everything still says the market is going down. And you want to see the best part about this? Is you got paid in this price range all the way down to the fib. And now because you added back on, you got paid a second time in that price range. Into contracts, profits at the trouble spot, but the rules are all met. So you add that second contract on. Now you're into once again. One off at the trouble spot again. Let the other one run. It's just a way, Safia. Sometimes the market's going to give you these opportunities. You sold 2, right? And then you bought 1. You met 1 target, which means you have 1 contract still active. Does that make sense? Sold 2, took 1 off at the target, but because the rules are still met, you took another trend trade. That's all it is you just took another trend trade. So you get back to being into it for 2, and it's like starting brand new. It's not anything different, really. It's just saying that, holy smokes, my rules are met again. I'm going to take this trade again. And the fact that you still have a contract open, it doesn't mean anything. It's okay. You're just going back to 2 open. There's instances, Safia, where I have had a high range and a low range, and I'll enter 2 contracts here, and then I'll enter 2 contracts up here at the other side because it's such a strong trade, and I'm so comfortable because all my rules are met that I'm willing to get in at the low end of the range, and I'm willing to add on contracts at the high end of the range. And then I'm just managing 4 contracts instead of 2. But when it's perfect, when every rule is met, when every indicator is for the trade, it becomes easier to do that. If you're breaking rules and adding on, it doesn't work as well. Does that make sense? Did that help a little bit? How do you get good at it? Post in the room, ask your questions, right? Make sure that you're following your rules. Make sure that you have a plan for everything that you do. Awesome. Nice job, Safia. Guys, make sure that every time you pull the trigger, you pull it for a reason. Make sure every time you manage out of a trade, you manage out for a reason. There's got to be an if-then. If my rules are met, then I take a trade. If my rules aren't met, then I sit on my hands. Embrace this outline for education. Post in class, use that spreadsheet, learn the rules, and then study it so that it becomes easy. Can't stress that enough, guys. You have to study. I don't care how smart you are, you have to study. Make sure that every entry is mechanical, right? Every entry has a reason for the entry. Every one has the rules met. I'm pretty sure, Bobby, different time frames, same look. I don't know. I don't trade NASDAQ. I haven't looked at them. But I'm pretty sure they're just higher time frames set up to look like lower time frames so that it slows down the market. Guys, you have to annotate your charts. If I don't know what you're thinking, what you're doing, it's hard to nudge you in the right direction. I need you to annotate. I need you to tell me why you did. Absolutely, Jay Solar. And then, guys, keep it mechanical, start to finish in the beginning. Give yourself 30 to 90 days to practice. You can adjust your targets. You can adjust everything based on your education. Keep it mechanical. And I put that one in the room. Take a look at it. There's a lot of great looking pictures. Jay Solar, let's do it in their most simple form first, okay? What's a strong top and bottom? What I find is that I don't like to have any wiggle room when I'm talking about a strong top or bottom. And what does that mean? That means that if my trigger lines make it through an area, I don't consider it a strong top. I don't consider it a strong bottom. So we're talking about what it isn't first. If my trigger lines go through the area, I don't consider it a strong top or bottom. It's a pretty easy recipe, right? The trigger lines don't go through the area. They tried to. Here the smalls, see how the smalls break through, the large don't? I don't consider this strong. So that's my first prerequisite, is I'll scroll back. Not a strong top. The trigger lines went through. But look at this one. Absolutely no trigger lines break through that area of support. I love that. And then it gives me the full reversal. And that's the second half, is it has to be a full reversal. Otherwise, it's just a termination. So here's a termination. And then once this termination gives me the full reversal, now I consider it a strong top. Does that make sense, Jay? What do you think on this one? Jay, what would you say? The trigger lines all made it through. Strong bottom or not? It's not. See how easy that can be? It really can. It really can be this easy. If none of the trigger lines break through and it causes a full reversal, absolutely, it's a strong top. If the trigger lines break through, we're never going to call that a strong bottom. It can still reverse the market, but it's not the best look. So as we come through, the smalls broke through. I don't consider this a strong bottom. But when it comes back and retests support and absolutely no trigger lines break through, it creates that strong bottom because of the full reversal, because of the odds favorable. Breaks through, not a strong top. Breaks through, not a strong bottom. Here it pulls back, no triggers, not a strong top because it didn't even have a chance to reverse. It never blinked and kept going down. Not necessary that it will continue to go down, but because they all stayed below, J Solar, isn't this enough to keep you from going long, especially into resistance? Not a strong bottom. And then check this out. Let's go back to the S&P. And here's a great example, right? Not a strong bottom. The market pops up, comes back. How do you feel about this one? Termination condition, absolutely no trigger lines break through, creates the full reversal. Look how the market reacted here versus how it reacted here. Pretty amazing, right? You've got it in one picture. Not a strong bottom, but it becomes a strong bottom when price retests that divergence low, none of the trigger lines break through, gives a full reversal, odds favorable, all the way up to the top. Didn't give us an opportunity, but at least this right here kept me from going long here, right? It kept me out of trouble. Yeah, that's a pivot stop out. And a pivot stop out's nothing more than the recipe. Right? The recipe for a termination condition. And we'll write it on here. Price reaches an area. No triggers break. It's a term. And then for that second one, if a term creates a full reversal, it's a strong top or strong bottom. So if we use that basic recipe, Jay, that's just a pivot, right? It's not coming from an area. Price didn't reach an area. It exceeded the area. The triggers exceeded the area. It's not a termination condition. Here, it's a textbook termination condition. Price reaches the area. The triggers don't break. The first half of it is cool. And then it creates a full reversal. Let me make this fit. And we'll say now it's a term. Do they? I see 0 trigger lines through. Are you seeing something that I don't? So this, Jay, and I love this question, man. I'm so glad that you asked it. That's just a pivot, right? That's your area. Price reached it. Trigger lines got past it. This is just a pivot. Yeah. But when price reaches that divergence low and none of the trigger lines break through, now it's a termination condition. And when that termination condition creates the full reversal, now it's a strong bottom. Jay, that was an amazing question because I guarantee there's 20 other people in this room that were wishing somebody would ask it. So those of you that are in the shadows and you've been wondering, does that help clarify a little bit? That's just a pivot. Now it's a termination. Now the termination creates a full reversal. Guys, it's okay. Be stingy with your analysis. What do we think about this one? And this is where your brains are going to play tricks on you, right? But Mark, one line of that small trigger line broke through the area. What's it mean for a trigger line to break an area? It has to go through, guys. It has to go through. This one didn't go through. You got one line. These work together in symphony. And Jay, this is one of those ones where you'll start to kind of create your own rules based on what you want to happen. Guys, none of my triggers broke through resistance. Give me a Y if you're comfortable with that. It tried to break through, but it couldn't, right? If I stick one foot through the door and go the other direction, guys, I did not go through that door. I threatened to. So this is one of those looks, guys, if it's one trigger line. Triggers go through and stays through, then fib. Man, Rain, there is some sort of software written recipe for what it takes to change a fib color. I don't know it. I'm not the tech guy. John Novak could answer that for you. But guys, and Rain, this is one of those ones. Thanks, Jay. Rain, this is one of those ones because I think your brain and my brain look at things the same, right? We look for exceptions. We look for additions to the rules because if one rule is great, then 3 rules must be outstanding, right? We love order. Chaos is aggravating. That's my brain anyway. I don't want to put that on you. And this is where I embrace simplicity once again, right? What do your rules say? Your rules say that you need strong triggers. Your rules don't say that you need strong triggers and there can't be a price bar that's done this or done that, right? It just says that you have to have that best trigger look. Termination conditions say that terminations are false, which means that price can't reach an area, right? And not have all the trigger lines break through. That's all it says, that you can't have a termination condition. And Rain, this is what I had to work through, just me personally. And guys, again, I never try to project my stuff on you. I would start saying, but this fib turned blue, therefore I should be going long in a long trend. And I would let myself trade into termination conditions because that fib turned blue. And man, it kicked my butt a million times. And I would say, I'm okay. If that turned red, I would suddenly say, well, that's okay. I can take it even if the rules aren't met. No, I know you're not, but it sparked, I guess, a little bit in me because that's what I did. And we had a question from someone else earlier that talked about the color of the fibs. And I just wanted to remind you guys that the colors of the fibs aren't referenced anywhere, right? And some people will say that I need an area inside of favorable large triggers. And then they'll say, well, I had an area inside of favorable large triggers, but my bid band changed colors. Or I had an area inside of favorable large triggers, but this trigger line turned against me. And it's human nature to try to add stuff. And Rain, you weren't saying that. And that's why I was trying to say over and over that I'm not projecting it on you, but your question sparked the discussion for me. If you allow it to stay simple, if you allow yourself to not add things that aren't there, that weren't written into the rules, I promise it takes a lot of the weight off of your shoulders, guys. This was a 50-50 trade. This 50-50 trade had divergence. It pushed beyond the window of opportunity, right? Do you have a rule for 50-50 trades? Does it involve divergence? And that's what I'm saying. Keep it simple. No areas inside of large triggers. And that was just it, right? It was close, Joel. It was a tick. It was a tick above. From a good bottom, you might make a judgment call on this one. Did you miss 2 trades, Joel, or were your rules not met for 2 trades? Rules not met, outstanding. Great job not getting into that trade. Rules met, cool. So don't say missed, Joel. Missed implies that you did something wrong, doesn't it? That's the implication. I didn't break my rules, therefore I missed a trade. That's awesome. My rules weren't met, therefore I didn't take a trade. That's awesome. Do you see how just a little bit of language changes the whole dynamic of what just happened? Not met. That's it. Guys, divergence prints on a 50-50. My rules aren't met. I didn't take the trade. If this market goes down 1,000 points, it still wasn't my trade because my rules weren't met. Take the pressure off of yourself, right? Take the pressure off by keeping it simple. And when the rules aren't met, congratulate yourself if you don't take the trade. Don't feel like you missed out, guys. It's not all our money. It's really not. I used to hate the analogy, and hate's a strong word, never mind. I used to dislike the analogy that John had. John said, if you walk into a bank and you say, give me all the money, you get tased and hogtied and hauled off to jail, right? Spend time in a federal penitentiary. If you walk into a bank and you say, hey, may I have my money, please? My rules are met. This is my money. Guys, you walk out with the money. Good morning, Michelle. That was John's. Give him props for that. Michelle, you thought you had room to the target. Too close. Should not have taken a pullback. Why not? That's your potential termination condition, right? Price reached it. Not all of your trigger lines broke through. What is 41.17? That's a target. Conrad. Do you see the difference? Potential termination because you don't have a clear path. And there's your target if that termination condition breaks. Does that make sense, Michelle? 50-50 on the fib, that's a target. So what you had was a 50-50 with a loss of momentum. There's your second issue. Your first issue is an area that hasn't broken. Your second issue is a loss of momentum. That loss of momentum pushes you beyond the window of opportunity. So this is taking a medium probability trade and allowing your issues to compound. Does that make sense? Guys, everybody wants to take 50-50 trades. Nobody wants to take perfect 50-50 trades. It would appear. So you know me, I've got pictures for everything. Guys, if I'm taking a 50-50 trade, doesn't that look familiar? Because the large didn't go through. What's a 50-50? That's all a 50-50 is. So let's go back to it. Guys, I love revisiting lessons. Check this out, Michelle. Here's the picture. I want you to steal this one, please. If no triggers break through, it's a termination, right? Price reaches, no triggers, it's a termination. If both the small and the large break through, you have a clear path. Simple. If the smalls are above and the large are below, it has the potential to break, but it is not a clear path. This is an issue. This goes from high probability to medium probability instantly. And then the more problems that you compound on top of that issue, the less likely it is to work. Guys, give me a Y in the room if that makes sense. The more problems that you compound on an issue, the less likely it is to work. So in this trade, my issue is that these fibs haven't broken. Exactly, the smalls are through, the large are not. Everything, all four lines to the other side, Michelle. Otherwise, it's a medium probability. The area has potential to break, but it hasn't broken. Guys, my money is worth a perfect entry on the 5-1. I have zero tolerance for giving away any more advantages. I need no divergence. I need strong triggers, small outside of the large, and I want a small window of opportunity, guys. This is my best chance for success if I'm dealing with the issue of not having a clear path. Does that make sense? Guys, everybody likes to take that 50-50 trade, and that's cool. It can be a fantastic trade. But if you're going to take a 50-50 trade, guys, you have to have a plan for it. I'm going to share this one with you. I call this the KISS trading plan. The keep it simple, sunshine. And if you're taking a 50-50, create a new checklist. Make sure that it's met, right? Take pictures of your entries. And guys, the management on a 50-50 trade has to be more aggressive. It has to be more aggressive. It has to be assertive on a 50-50. So, Michelle, if this were my plan, divergence says no trade. I'm not saying that that's your plan. But if this were my plan, if I were looking at these trigger lines, this divergence would keep me out of the trade. That's it. I've given away a second advantage. I don't want anything to do with it. Does that make sense, though? Bobby, have you ever met a lady that's just kind of pregnant? You ever sort of had the flu? I mean, it sounds silly, right? Why on earth would I want to add something to what I have to think about? Why on earth would I want to give myself one more thing to consider as someone that's trying to become consistent? Either they're through or they're not. Either it's broken or they're not. And Bobby, I know the point that you're making there, and it's a good one. But if I'm not broken, because that's the requirement for a clear path, is that both triggers go through. Both triggers have to go through. And if they don't both go through, it's not broken, no matter how close those large triggers get. And that goes back to what we were talking about. Yeah, that was Paul. Did I not say Paul? That goes back to when we were talking about no trigger lines through the area, right? Well, Mark, what if half of it gets through? Then the trigger lines got through, right? No. So keep it easy, man. Keep it easy. Keep it simple. The question, I think, was Paul. And when I was going off on a tirade, yelling at you, I may have said somebody else's name. Sorry. in the heat of passion there. No, we're talking about, Paul, you were asking, do I give any credence to how much of the large triggers are through? Yeah. Bobby, take that. I named the plan after you, Bobby. It's a sunshine plan. So no, I don't. I either let them break or I don't as a brand new user until I'm making money. And yeah, trading the edges, tops and bottoms, the same link that I gave earlier, telling you that it was outstanding. But guys, remember, you start from a place of simplicity. You start from a place where everything is easy. As you grow with the software, you absolutely will grow outside of simplicity because you're going to be able to read your charts. So Michelle, I hope that helped a little bit, right? It's okay to insist on perfection in the beginning. And then Safia, 50-50 trade with divergence, right? And it railed right up through. 50-50 with divergence. Low end doesn't get it. High end. Safia, you got stopped out inside the window of opportunity, didn't it? Amen, John. Safia, do you see how you put your stop at the area of resistance inside of favorable large triggers? Yeah, so divergence pushed it higher. Higher was up here, and you got out up here. A stop up here, but it's hard to put that much risk on it too. It was a great top with odds favorable. Divergence tells me that it may push higher, right? Divergence says where the market shouldn't go, Safia. Stop should be where the market shouldn't go. Where is that initially? Outside of the window of opportunity. That's the easiest way to say it. And it means that on this trade, you have 3.5 points of risk. You were inside. Here. Let's see if this helps. From the top of the trigger lines to the bottom of the trigger lines, right? From the lowest point of resistance to the highest point of resistance, this is where the market is likely to continue. Your stop was right where the market was likely to continue. Does that make sense? This is a great management lesson. Sometimes it was higher, you moved it down. Sometimes you have to be willing to keep that little bit of risk on there. Because this is a great lesson because we've seen this exact thing 3 times today, right? 3 times we've seen people, oh, don't waste that energy being mad at you. You're wonderful. You don't deserve to have anyone mad at you, even you. This is just a great lesson. Stop placement, right? Put it where the market shouldn't go. And sometimes it means you got to put a couple extra ticks on there. And that's okay, guys. That's part of it. And I love that John put the video in there for the targets. And there you go. Michelle, perfect. All triggers through, right? Now the area is broken. Everything says down. You jumped in early when you could have been paid. It went back up because someone decided that it was going to go back up. And that's it. Hey guys, did you see what John wrote? 75% of those 50-50s lose, give or take, when it's not coming from a good top or bottom. Great tops and bottoms, guys. They make the world go round. And I think that's it for me today. Thank you for the pictures. Holy smokes. Thank you for all the questions, guys. And then John giving you more stuff to confuse you. A nice long video on divergence. Make sure you're good at the simple stuff before you start delving into the advanced stuff. Debbie, you have a great day too. And guys, you're very welcome. There's that 50-50. It still hasn't broken the area, right? It's okay. Your money's worth a little bit of patience, right? That's okay. John knows he's amazing. Melinda tells him every day. It is. We still say it every morning, guys. We look at fibs holding to the tick and we're like, holy crap. Look at this stuff. Let's learn how to use it. That's what you should be doing too, guys. The software works. It's amazing. Commit to it, right? Commit to the education. Commit to the process. And guys, just a heads up, this is why I don't personally care for new users taking divergence with divergence on a 50-50. Because you have to manage it. You have to be assertive. You have to put your stops in the right place. You'll get there. Everyone will get there. Just not there yet. Guys, amazing classroom today. Thank you so much for the participation. I'll be back tomorrow morning at 9 a.m. We're going to do it again. And we're going to do this every day until you guys get to where you want to be. And here's what I want you to do today. I want you to email 5 friends and say, I'm learning to day trade. Come learn with me. Have someone help keep you accountable, guys. Everybody has a friend that wants to do this. Bring them in. Start teaching your plan to somebody new. You'll be amazed at how smart you'll get when you're accountable for someone else's success. Jay, you're welcome. Thanks for the great question, man. That was such a good question today. Get her. Give me your phone number, Safia. I'll call her. I'll convince your sister. I can be pretty darn charming when I need to be. And there it is, 10% referral free. You gotta love that. Guys, I'll see you tomorrow morning. Have an awesome afternoon. Thanks for being here. You guys take care.